We can start the session, sir. Sundarajan, sir.
Yeah. Respected Chairman, SIRC of ICAI, Sri Shinamasan sir. Respected Speaker of the Day, Sri Ramesh sir. And Sri Niranjan Joshi sir. And the people who have joined now, we welcome you all to this bank audit seminar. I request our chairman to give an inaugural address. Thank you, sir.
Thank you, Sundarajan sir. A very pleasant good evening to all. My greetings to today's evening speaker, CAS Ramesh sir and CA Niranjan Joshi, and Treasurer of SIRC of ICAI, CA Sundarajan sir, and my council colleagues who are participating here, and other members joined this virtual CP seminar on refresher course on bank audits. I welcome you all for this 2 days refresh program on bank branch audits. Members, today is the first day, the first session on IRAC norms and the audit of evidence by CAS Ramesh sir, and second session on the bank audit planning and documentation by CA Niranjan Joshi. And tomorrow first sessions will be on technology as a audit tool in bank audit by CA Kuntal Pisha, and the second session a new LFR and other certificate by CA D. Premnath. Members, the role of statutory as well as the branch auditor is a significant, and this seminar would focus on the subject that are paramount importance, on which the eminent resource persons would be sharing their expertise and the exposure on the issues that confront while performing the branch bank audit. For information of members here, I want to share few latest developments with regard to branch bank audits. Members, the RBI is in a consideration of increasing the fee structure. Maybe in a very short time you may get that confirmation, and members, maybe in 3 to 4 days RBI may forward the final list to all the public sector banks, from where the actual process of selection of the firms will be starts. It comes to notice of ICAI that few of the banks are interested to use our ICAI software for selection of statutory branch auditors, and few are not yet confirmed. If they can use this ICAI software, we have made sure for the equitable opportunity for all size of the firms, like to allotment to those firms who are not getting assignment in the last 2 to 3 years. Even in terms of allotment of the branches also, this software will take care. And efforts on for requesting the banks to use the ICAI software, which will in fact give the benefit to the fraternity with a transparency, including the fees equalization based on the firm size, we can say that category of the firm. Even one more request we made on behalf of ICAI to all the banks and central auditors to give the time for the audit. We come across the cases where the pressure will build on the statutory branch auditor to get the audit, maybe very short one, we can say that 4 to 5 days, sometimes 1 week, which is not at all sufficient to discharge the statutory audit. Before go to the technical session, I will try to clarify certain issues and the doubts may be useful for the members regarding the norms issued by RBI for the statutory audit of the banks. The first issue I want to touch upon the process of the cooling period. Presently, members, no such cooling period concept in all the places from March 21 onwards. Every firm are eligible to get the appointment, but few or majority of the firms has not been appointing from the last 2 to 4 years, specifically in the places of metros like Chennai, Hyderabad, Bangalore, and Cochin, and some other places also. And firms are felt that because of the cooling period has not getting this appointment. But the fact is, after merger of these national banks, the number of branches are reduced, and the other fact also, RBI circular on the 90% of advances coverage. That is also one of the reason. The second issue I want to share to the members about this category 4 firms. Now the RBI is seeking the strict compliance regarding the condition that every proprietary firm or individual must have that one paid CA. If the ICAI has to follow this guideline strictly, out of the 22,000 proprietary concerns and individuals, 18,000 will not be get the eligibility. This year, ICAI was successful in lifting this criteria. It won't be effect on the members, especially on category 4 members, to get this appointment for 22 March. The third one, the number of branches being allotted to the, especially the category 3 and 4. This is the one proposal maybe, but may not be implementable for this year. But this proposal is the category 4 and category 3 firms are eligible to get the 2 firms only, 2 branches only instead of 3, and category 1 and 2 are 3 branches. This is the one proposal. May not be possible to implement this year, but surely in future we'll get this impact. The last advice to the members who are participating here, for the MEF 22-23, you can keep not only for 22-23, for every MEF, for every year, 2 dates are the most important dates. That's the first date is 1st January 22. And the second cutoff date is 31st October 22. These 2 dates, between these 2 dates, all the holdings, means the number of partners, should be continued between the 2 dates. If anything changes happen, your category will be downgraded. I want to say that one example with a very short time. In case of the firm having 3 partners as on 1st January 22, if they apply for MEF, the firm will get category 3 in the month of August or July 22. Suppose if any one of the partner resigns from the firm before the 30 October 22, then the firm will be downgraded to category 3 instead of category 2, even though any other partner joined in the place. You need to understand the same membership number should be continued between these 2 dates. That is the important, not the number of partners. Members, with this, I am sure the members who have been enlightening and unveiling the technical session with the deliberation on the notification and the circulars with which forms master circulars issued by Reserve Bank of India from time to time. Let us showcase once again our capability in completing the audit, which with a perfection, bringing wherever required the attention of the authorities concerned on the shortcomings, besides adhering to the time schedule. I thanks to especially to the resource person to deliver the length of the IRAC norms for the banks, its categorizations and planning of the bank audit and documentations and related matters and revised LFR formats. With this, I once again I wish to all the members to enlighten this knowledge from the experts of the speakers. I wish the grand success this program. Thank you all. I will share that all other bank related activities in the next webinar. Thank you all.
Thank you, Chairman sir. Your points have been well taken, because the dates which has been very mandatory for getting the bank audits, and also your consideration for getting the bank audits advice. And I think our speakers will have a better presentation on all these items. I would like to introduce our senior person, Mr. Ramesh sir, who is well versed in this bank audit. He is graduated in economics from Vivekananda College in 1978, qualified in November 1982, and commenced practice in early 1983. Currently, he has also passed the information system audit exam conducted by the ICAI in September 2002, securing the All India 10th rank. great inspiration for the youngsters and for all of us, rather I should say it that way, is empaneled as peer reviewer with peer review board of ICAI. He has presented papers on bank audit, accounting standards, auditing and assurance standards, and peer review at several seminars organized by SIRC and branches. He has presented papers at seminars organized by the Chamber of Commerce, has contributed articles in CA journals and SIRC newsletters, has co-authored a book on bank audit. He is a faculty member for training programs organized by CNAG office, Chennai, IOB Staff Training College, Tamil Nadu Commercial Taxes Department, etc. Is a voluntary blood donor for more, and had donated 40 times in the last 12 years. Great, sir. And you have become a great inspiration for all of us. Thank you so much. Sir, can I introduce the next speaker also, if you permit? Ramesh, sir.
Please, sir. Please go ahead.
Yeah, thank you, sir. Thank you, sir. Welcome, say Niranjan Joshi, sir. He is a Bachelor of Commerce from University of Mumbai. He is a fellow member of the Institute of Chartered Accountants of India. He is also qualified in DISA from ICAI. He has successfully completed IFRS course conducted by ICAI. He is a practicing chartered accountant since 1997. He is currently working in the area of banking and financial sector. He had been speaker in training programs and seminars organized by ICAI and all the 5 regional councils, various branches of ICAI across the country, and various study circles in Mumbai. He has dealt with subjects such as bank audit, accounting standards, standards on auditing, audit of insurance companies, networking, and merger of CA firms. He has been a trainer for DIRC course of ICAI, certificate course on concurrent audit of banks of ICAI, certificate course on documentation, audit documentation of ICAI. He has also contributed by writing in various publications related to bank audit issued by ICAI and WIRC. He has been a guest faculty in the past at training centers of corporates, banks, and institutions. I think we have 2 trainers here to train all of us in bank audit to become a gun for the bank audit. Yes, thank you, sir. We welcome you, both of you, sir. Ramesh, sir, you can start the proceedings. Thank you, sir. Thank you.
Can you see my screen now?
So we are seeing your desktop, sir. Can you navigate to PPT, sir?
Yes, sir.
Please.
This is emergency.
Can you see my screen now?
Yes, sir. It's visible. You can make it in slideshow mode, sir.
Yeah, I'm going there. Is that all right now?
Yes, sir. Yes, sir. Fine, sir.
Okay. Shri Gurubhyo Namaha. Salutations to all my gurus, without whose help and guidance I wouldn't be what I am today or where I am today. At the outset, let me thank SIRC chairman and the treasurer of SIRC for inviting me to be a member of this program on bank branch audit, where the topic given to me is IRAC norms. It's a refresher course. We are all aware of IRAC norms. There's been very little change in the IRAC norms for the last 2 decades or so. But still, I think it is very important to have a refresher course for the simple reason that most of us don't do a bank audit on a daily basis or a monthly basis. Therefore, since the once a year assignment, it's about time that we brushed our knowledge of bank audit. And I'm going to, the next 1 hour or so, try and bring back the old memories of IRAC norms with whatever little small changes or whatever little extra information that I have to share with you with regard to the latest circulars. The way I have structured the session is before going into the IRAC norms, there were some concessions given to the MSME sector, and I would like to take a look at that to see whether they are still relevant or they are not relevant. Then we look at the relevance of the COVID-19 regulatory package. Again, some of them are not relevant, some of them are relevant, and some of them will be partially relevant, but we need to know which are relevant and which are partially relevant. We will then move on to the resolution of COVID-19 related stress of individual and small businesses. And then finally, we'll go on to prudential norms, a very quick refresher, where we'll talk about the NPA norms. We will also talk about restructuring of advances and project loans. I might not spend too much time on project loans because that's not something which most of us doing branch audits will see, because they're all over large loans and we might not find them in the branches that we do. But it's still better to know about it in case we do have a project loan in the branch we're auditing. We need to know how to cover it. And then asset classification, and finally the provisioning norms. As far as the MSME sector is concerned, there are two circulars issued in February 11, 2020 and August 6, 2020. The circulars are very clear. It is a one-time exercise as a special dispensation given to the MSME sector, which had aggregate exposure of less than 25 crores. A concession was given whereby the account could be restructured without slipping into NPA category, and the restructuring was supposed to be completed by March 2021. Now, if during the course of the audit for this year, you find an MSME account restructured during the year, quoting these two circulars, please be wary of that, because these concessions are not applicable for accounts restructured under financial year 21-22, and most likely they may have to be downgraded if they've been restructured. So I think we need to watch out for that. These circulars are no longer relevant. They are not relevant for the year for the year under audit, and therefore we need to be doubly cautious when we are looking at an MSME sector account which has been restructured. Moving on to the COVID-19 regulatory packages, there are 4 circulars which are issued. Main circular, there are a lot of other circulars issued, but these 4 have a bearing on probably what we will do. Again, these circulars are also over. Whatever deferment was given is over. The March 27, 2020 circular and the April 17, May 23, 2020 circular, there is the circular number A and D on your screen. The effect of these 2 circulars was to defer the repayment of term loans, which was due from March 2020 to August 2020. In other words, though the amount payable during that period has been deferred by 6 months. Typically, if the account was ending, let us say, June 2025, if the tenor was ending on June 2025, it can now end in December 2025. That's the only deferment that was given as far as term loan is concerned. As far as working capital facilities are concerned, they were allowed to increase the liquid cash flow by reducing the margin. Please note, in my opinion, as per the RBI directives, the deferment of term loan by 6 months should be followed strictly. It did not say that it can be deferred indefinitely. It is only the 6 months period from March 20 to August 20 that could be deferred. So as I said 2 minutes back, if the original tenor is ending in June 2025, it should end in December 2025. So if you look at a term loan account, where you find as per the original sanction, there is a date and there is a revised date because of a restructuring or a deferment, ensure that it is within 6 months. Now the question arises that in case of the interest that was debited from March 2020 to August 2020, how does that get paid? I think if it was an EMI loan, the EMI amount per month should be adjusted to ensure that it closes in December 2025 and not any time further. If it is a term loan where the interest is paid as and when serviced, then the interest must be served as even during the period or immediately after the deferment is over. So please watch out for this. There could be cases where instead of ensuring that the EMI is adjusted, they adjust the tenor, which will go from 6 months to probably 8 months or 9 months. Friends, let us look at the prudential framework for resolution of stressed assets. For almost 15 years now, the RBI had been coming up with various formulas for resolution of stressed assets. The framework was with regard to revitalizing of distressed assets, corporate debt restructuring, flexible structuring of existing long-term loan, project loans, SDR, and so on and so forth. In fact, you will find all of them have been listed at the bottom of the screen, and none of them are any longer in vogue. On June 7, 2019, the RBI came up with a prudential framework for resolution of stressed assets. As for this, they only laid down the guidelines, and they said it is the duty of every bank to identify and report early stress. In other words, as and when the account is stressed, they need to identify it immediately and plan for a resolution. There must be an implementation plan which must be approved by the board of directors. There must be a policy for restructuring. Based on the directives given in this circular, every bank needs to have a resolution policy approved by the board. Conditions have been prescribed for implementation. Conditions have been prescribed on how to go about it. They also talk, the circular also talks about an meeting of the joint meeting of the lenders, or an inter-creditor agreement, or ICAI. The circular says where there are more than one lender to the borrower, and if all the lenders put together agree in terms of 75% of the value of the distressed asset, if there is an agreement, or 60% by number. So in other words, if there are 10 lenders to the borrower, if 6 of them agree, or 75% of the total amount due to all the 10 banks, then the others will follow, even if they are not in agreement with the resolution plan. They necessarily have to follow. Now, when does this come into play? For all exposures over 2,000 crores, the date of the surplus is the date from which it comes into play. For those exposures which are less than 2,000 crores but more than 1,500 crores, January 1, 2020, excuse me, January 1, 2020 is the date on which it comes into play. For all other loans less than 1,500 crores, the date is yet to be announced by the Reserve Bank of India. But let us have one thing clear in our mind. Any resolution of a stressed asset or any restructuring that is done will have to be done within the framework of this this circular issued by Reserve Bank of India on June 7, 2019. When they spoke about early identification of stress, they said there must be a system whereby as soon as there is a stress, the account is classified as a special mention account. They spoke about a special mention account is one where there is a default. And what is the default? RBI says default is one where whole or part of any installment which is due has not been paid by the debtor, then it amounts to default. In other words, if today an installment of 10,000 rupees needs to be paid by a lender, and if it has pays only 9,500 out of it, he will be a defaulter. Then the account will be in default. For revolving facility like cash credit, default would mean if there is the outstanding balance remains continuously in excess of the sanction limit or drawing power for more than 30 days, it will be an account which will be in default. You have an SMA 0, which is up to 30 days of default in the case of term loans. SMA 1, where the default is more than 30 days but up to 60 days, and SMA 2, more than 60 days and up to 90 days, and the 91st day it will become an NPA. RBI has also issued circulars where they've insisted, or they made it mandatory, that every bank should have a classification of SMA accounts done on a daily basis. In other words, they need to have a software which takes care of this, is what RBI has mandated. They have given an example on how an SMA should be determined. They say, if on 31st of March 2021, an amount is due under, let us say, a term loan account, an amount is due. And if that amount is not received by the time the day-end operations is run, the day-end processing is done by the bank, then the account should be classified as being a default account. It will become an SMA 0. There are not no grace days. On 30th, if it is not received, by the time the day-end operation is run, the account will be classified as an SMA 0. If it continues, if the amount does not come and it continues to be in the same position, then on April 30th, it will become an SMA 1 account. And if it remains continuously on the same basis, on May 30th, it will become SMA 2. And on June 29, 2021, the account will be an NPA. This is an example given by RBI in this circular, in a circular which was issued on November 19th, 2021. This is a very recent circular, it just issued about 4 months back. November 19, 2021 circular talks about the process of identifying an SMA 0 account up to an NPA account. SMA 0, SMA 1, SMA 2 and an NPA account. How it should be done? It should be done literally on a daily basis. So if I was the auditor going into a bank, I would probably ask them for their list as of 28th February or even 31st January or even 31st December to see what are those accounts on 31st December which are on SMA 0 and what happened to them during the next 3 months. Similarly for SMA 1 and SMA 2. If I look at a statement as of 28th February and there are, let us say, 15 accounts on SMA 2 and on 31st of March, I look at it and I don't find 15 accounts, I find only 8 accounts. My curiosity should raise up and I should check those 7 accounts to see how did it move from SMA 2 to SMA 1 or SMA 0 or even the normal account without being a special mention account. I think those are things that we need to do. We need to get the list of SMA account not just on 31st of March, but probably even as on 31st December 2021 for this year's audit, and then go through the accounts to find out how they have moved from one category to another category, or whether they continue to be in the same category, in which case there's probably a slippage into the 4th category, which is the NPA account. Moving on to resolution for COVID-related stress. In August 6, 2020, Reserve Bank of India came up with a resolution plan, resolution framework for eligible corporate borrowers and personal loans who have been stressed due to COVID. This concession is available only for those accounts which are stressed due to COVID. And for that, there must be a board approved policy. Now, we need to understand what the stress due to COVID means. Supposing I have taken a housing loan, and for a minute, assume that I am a central government employee. I come to the bank and say, look, I want a resolution for my loan under this particular circular. And I quote the circular dated August 6, 2020, which lays down the resolution framework. Am I a person affected by COVID? I might be affected physically by COVID, but is there financial stress for me due to COVID? I don't think so. I am a central government employee and I have got my salary every month, even during the time of COVID. Therefore, there should not be any financial stress for me. And therefore, I think the government should not allow, the bank should not allow this concession to be. This concession, they are very clearly stated, RBI stated, is available only to borrowers having stress due to COVID-19, and the fact of that stress should be documented by the bank or the branches, is what RBI says in the circular, and therefore that is something which we need to look at. If there have been some cases which have been restructured because or resolved because of this circular, we need to understand and see whether there is a financial stress due to COVID. Again, going with the same example, let's say there are 2 students who have taken an education loan, both of them were employed and they've started repaying the loan. The first is working in TCS, while the other student is working in a small MSME company. Due to stress, the MSME company could have closed out, and therefore the financial stress for student 2. But for student 1 who is working in TCS, there is no financial stress because he continues to draw a salary. I think this distinction must be made by the branch. They should document that there is a financial stress, and then only go ahead with this COVID-related stress package. So we need to, as auditors, we need to look at whether that has been done and documented. The eligible borrowers are corporate persons, personal loans, and other eligible borrowers. Personal loans are consumer credit, education loan, loans given for creation or enhancement of immovable asset, example housing loan, and loans given for investment in financial assets. These are the eligible borrowers. We'll also look at who are the ineligible borrowers. The ineligible borrowers, the MSME borrowers, whose aggregate exposure to the lending institution is 25 crores or less as of March 1, 2020. The logic is very simple. They've already been, there is a separate circular which deals with the resolution of stressed assets as far as MSME is concerned. Therefore, that has been taken away. Then you have farm credit, loans to primary societies, exposure to financial service providers, state governments, central governments, the housing finance company. These are all ineligible borrowers, and therefore this circular will not apply to them. Coming to resolution of stress and other exposures. please understand that although the circular no longer has any validity or does not have major validity, the resolution plan which was invoked under this circular before 31st March 2020 needs to be implemented within 180 days from the invocation, which is June 2021. So for that limited purpose of ensuring that the implementation took place before 180 days, because if it took place in July 2021, when the date of invocation is December 31st, 2020, then the resolution has failed. It can no longer be classified as standard. So to that limited purpose, I think this circular is still essential, and that's what I've given at the bottom of the slide. Resolution plans implemented after April 1, 2021 and before June 30, 2021 should be critically examined by the auditors, and if it is implemented afterwards, but they continue to be standard, I think we need to take a stand that it is a restructuring of an account and therefore needs to be downgraded. As far as personal loans are concerned, one thing which cannot be resolved under this circular is the loans given to their own staff. That is not eligible under this particular circular. The conditions are the account classified as standard, but not in default for more than 30 days on March 31, 2020. Otherwise, it should be an SMA 0 account and not an SMA 1 account. Please note, it should be classified as standard of March 1, 2020. Why I bring this? Because after all, these things should have been done before. Is if the implementation is taking place only in April 2021, then as an auditor, I am the one who is bound to look at whether the conditions for granting this concession itself has been fulfilled or not. No other auditor would have checked it. The previous year auditor would not have seen it because the account would not have been restructured then. They would have probably invoked it, but the resolution plan would not have been implemented. And therefore, we need to look at this. Invocation is before 31st December 2020 and it will be implemented within 90 days, which is again March 31, 2021. So if it has been implemented on 3rd April or 4th April 2021, I think we are well within our rights to say that this is not on. You cannot take the concession now because it has been restructured after the date of implementation and therefore not eligible for concessions granted by this circular. Now moving on to individuals and small businesses. 2 slides back, I said there was a resolution framework for COVID-related stress issued on August 6, 2020 for eligible corporate borrowers and personal loans. Now, in May 5, 2021, the RBI issued one more circular, and the preamble of the circular says we are from the August 6, 2020 circular, we are delinking the personal loans that are given to individuals and small businesses, and there is another circular for it given on May 5, 2021. The condition was if they have already been restructured by the August 6, 2020, then they cannot be restructured again by this May 5, 2021 circular. In other words, the restructuring concession is only a one-time exercise, it can be given only once, and therefore the second circular cannot come into play for those personal loans and small businesses which are restructured by the circular dated August 6, 2020. Again, something which we as auditors need to look and see whether it has been done properly. Of course, there are few exceptions have been given for this, which we look at in the course of the next 2 slides, where an account was restructured with the August 6, 2020 circular, but some things were missed out, which can now be given. That exception has been given. We will look into that. The last date for invocation of resolution permitted under this circular is September 30, 2021, and within 90 days, that is by 31st of March 2022, it must be implemented. So you could have cases where it has been invoked, but still not implemented, in which case, even as on 31st of March 2021, the classification, asset classification may have to be changed. So please look at this circular. It is May 5, 2021 circular. Now, who are the eligible borrowers for the May 5, 2021 circular? Individuals other than bank staff who have held personal loans, individuals who are availed of loans and advances for business purposes not exceeding 50 crores as of March 31, 2021. I really don't understand this circular to the extent that 50 crores is a huge amount. Small businesses having borrowings up to 50 crores, I'm really not able to understand that much. But the fact remains, the circular really talks about small businesses which are not micro, small and medium enterprise. As of 31 March 2021, having an aggregate exposure of not more than 50 crores. So anybody who has an aggregate exposure of up to 50 crores are eligible to come under this circular, provided they are a small business, may be engaged in retail or wholesale trade also, but they should not be an MSME. Then they can come under this circular. Now, the aggregate exposure has been defined by RBI as both fund-based and non-fund-based of banks and NBFC. So typically, if you look at it, just to take a very hypothetical example, if the bank with which they are having the loan, say, let us say 45 lakhs is what the term loan and CC given by the bank, and they have another loan with, let us say, Sundaram Finance of 8 crores, then the fund-based and non-fund-based of banks and NBFC is more than 50 crores, and therefore they will not be eligible to come under this. Again, going back to another example, the fund-based may be 45 lakhs, but there may be non-fund-based of a letter of a bank guarantee of another 10 crores. In which case they will not be eligible for this. Please look at the eligibility. Most often we look only at the fund-based exposure. We don't worry about the non-fund-based exposure, and to that extent, we might be making a mistake and allowing a borrower who is not eligible to be restructured under this particular circular of May 5, 2021 to be restructured by the bank. Now, I told you that there were few exceptions given for people who already enjoyed a concession by August 6, 2020 circular and who are not eligible for May 5, 2021, but there are a few concessions, and we look at what those concessions are. Now, if they had had a restructuring by August 6, 2020 circular and there was no moratorium that was given to them, or the moratorium was given was less than 2 years, under this new circular, they can be permitted to be given a moratorium period of up to 2 years. However, the residual tenure may also be increased, but both the moratorium and residual tenure must not exceed 2 years. So somebody who had been restructured by August 6, 2020 circular, but was not given any moratorium, can now enjoy a moratorium of up to 2 years under the May 5, 2021 circular. Similarly, for working capital, nothing was done under the previous resolution. Now they are allowed to review the working capital limits and the DP on a reassessment of the working capital cycle and reduce margins if necessary. Please note, reduced margin should be done before September 30, 2021 and will be restored to original levels by 31st of March 2022. These are all circulars which definitely have an impact on what we are doing, what audit we are going to do this year, and that's the reason why I brought all of these circulars to your notice. Now, when is implementation complete? I spoke about completion, implementation being completed before 31st of March 2022 or 30th June 2022. When is that complete? The implementation is complete. Sorry. The implementation is complete only when all the documentation, including individual necessary arrangements, whatever forms need to be signed, whatever charge needs to be created, all of them is done and completed by all the lenders. So in the case of consortium banking or multi-banking, it is incumbent on the bank, on all the banks, to get a certificate from each of the members of the consortium or the multiple banking to ensure that this has been done. I think this is a very important document that we need to see in the file of the branch we are auditing. Let's say there is a borrower who has got multiple banking or a consortium business, and if the branch we are auditing says the implementation is complete because by 28th of March we had signed everything, please insist that please ask them to get you confirmation from the other lenders also that it has been done, because without that the implementation is not complete. How do you, what about the asset classification of these accounts with the restructure? When it is implemented, where the resolution plan is implemented, the account classified as standard may be retained. But if the account was standard and during the process of restructuring or the resolution process, it had slipped into substandard, even that can be upgraded as standard on the date of implementation. Please note, it is on the date of implementation and not on the date of invocation or any date between these two. Only when the implementation is complete can an account which has slipped into NPA between invocation and implementation can be upgraded. If there is an additional finance that has been granted before implementation, they may be classified as standard asset till implementation, disregarding actual performance. And finally, if the implementation plan is not implemented, the classification of additional finance sanction will also be based on actual performance, or the rest of the credit facility whichever is worse. So we need to remember that whichever is worse is what will really apply here. Now moving on to IRAC norms, I'm going to quickly run through the IRAC norms. We all know that the NPA norms is uniform norm of 90 days for all advances except agricultural loan. Agricultural loan continues to be based on crop season. In other words, to put it in very simple terms, any amount due to the bank, if it is not paid within a period of 90 days from the date on which it is due, will become a non-performing asset. Now, what is the due date? If an interest gets debited today, it is due today. So from today, if it is not cleared within 90 days, on the 91st day, the account will become an NPA. What about installment of term loan? There is a date that would have been mentioned in the sanction letter. RBI in one of its circulars says, we have come across the practice that most of the banks do not mention a particular date, but you just say June 2020, the installment will start. And let us say in June 2025, a 5-year term loan or a 5-year 5-year tenor for a term loan or an education loan or whatever the loan is. All of them are essentially classified as term loans. RBI says you must have a particular date. And they said, even if you've not had the date in the previous sanctions that you've done, please ensure that they are changed. And from now on, I think the circular issued sometime last year. When you issue when you sanction the loan, there must be a particular date and not a particular month for the repayment. In other words, RBI has definitely moved far ahead in terms of implementation of NPA norms, and have now reached a stage where it says an NPA date should not and need not necessarily be only at the last day of the quarter or the year end. It can be any day. So far, whenever we were doing audit, we always found it to be 30th June or 30th September, December or 31st March. That should not be the case. It should be done on a daily basis. In fact, that is the reason why RBI has said that you need to run your day-in process and classify accounts according to the SMA category and also according to the NPA norms. So this is what is very important, which we need to keep in mind. With the 90 days of the Bible, any amount due to the bank other than agricultural loans, which is not paid within a period of 90 days from the due date, will have to be classified as a non-performing asset. Agricultural loans continues to be classified on crop seasons. In the case of term loans, if there is an installment of principal or interest remains overdue for a period of more than 90 days, the account will become an NPA. So if the November installment is not paid before 31st of March, account will become an NPA because we have December installment, January installment, and February installment. So it will become an NPA. In other words, as on 31st of March 2022, they should have cleared all the arrears till 31st of December 2022, as far as the principal repayment is concerned. In case of interest repayments also, an account will be classified as NPA if interest applied at specified risks remain overdue for more than 90 days. Typically, if you look at it, all interest and all principal due by 31st of December 2021 must be repaid before 31st of March 2022 for the account to be classified as standard. If there is any deviation here, it has to be classified as substandard, downgraded. This is as far as term loans are concerned. Now, I have one question. There is a term loan which was classified as NPA in December 2021. Since September, October, and November installments were not paid. However, in February 2022, the borrower clears all the dues till December 2021, and the bank upgrades the account to standard. Is this right? That's the question. Let me state the question again. It was classified as NPA on December 15, 2021, because we didn't have September, October, and November dues had not been paid, installments had not been paid, and therefore in December they classified it as a non-performing asset. The borrower comes in February, sometime in February, and clears out all the dues till 31st of December 2021. The branch immediately upgrades the asset. Is that right? We have to take a firm stand against it. It is not right. Because the RBI Master Circular says if arrears of interest and principal are paid by the borrower in case of loans account classified as NPA, the account should no longer be treated as non-performing. In other words, as on the date on which they are clearing, all the arrears of interest and principal must be paid. It's not just the 90-day delinquency norm arrears. If he comes into pay on 17th February 2022, then till 17th February 2022, whatever are the arrears in terms of principal or interest will be paid for the account to be upgraded. Otherwise, the account cannot be upgraded. The same view has been reiterated by ICAI in its guidance note. The page numbers that I quoted there may be wrong because they are page numbers of the previous edition, the 2022 edition. I don't think, I'm not sure it is the same page number, but please do check. Upgradation, I would like to read what the ICAI guidance note says. Upgradation is allowed only if the account reaches no overdue status. In other words, on the day the branch wants to upgrade, there should be no overdue at all. Simply put, there must be all dues till that date must be paid off. This should not be misunderstood with overdues brought within 90 days. In the example that I gave you, there were overdues as of 31st as of December of more than 90 days. The account is classified as NPA. In February, he came. He did not clear out all the dues till that date, but he cleared out only the dues till 31st December, and therefore the account cannot be upgraded. I hope I made myself clear. Quite a few of the branches have indulged in it for a long time. This is not a new concept or a new norm set by RBI. This is always the norm in the IRAC circular, and we need to ensure that it is followed to the letter and spirit by the branches. When it comes to ODCC account, what are the NPA loans? The account remains out of order in respect of an overdraft cash credit. What do we mean by out of order? There are two or three conditions. Let's look at the first condition. The balance is always in excess of the sanction limit or DP. Take an example. The sanction limit is 10 lakhs. Let us say the margin is 25%. So if they have stock of 15 lakhs, 75% of this is definitely more than 10 lakhs, and therefore the sanction limit is the amount up to which they can draw. But if they've been operating at more than 10 lakhs, and let us say 11 lakhs for a period of continuous period of 90 days, on the 91st day, the account will become NPA. The next part of the example that I'm giving, sanction limit is 10 lakhs. The stock figure is only also 10 lakhs. 75% is what 25% of the margin. Therefore, they can only draw 75% of the sanction limit, which is 7.5 lakhs. And the account is being operated 8 lakhs continuously for 90 days. Although it is well within the sanction limit, it is in excess of the drawing power, and therefore the account will be classified as an NPA. This is condition one. The second condition is the balance outstanding is well within the DP limit, but there are no credits at all continuously for 90 days. Now, the master circular says continuously for 90 days as on the date of balance sheet. There is a lot of confusion. Bankers kept on insisting that this is only applicable for the outstanding as on 31st of December, 31st of March of the concerned year, because the circular says continuously for 90 days as on the date of the balance sheet. RBI came up with a circular on November 12th, 2021, where they clarified the issue and said, as on the date of balance sheet, has been removed, but there are no credits continuously for 90 days. So it's an ongoing process. If the last credit in the CC account was, let us say, on June 30th, 2021, then July, August, September, it automatically becomes an NPA. Unlike a term loan, in the case of CC, the entire arrears being cleared does not come. As long as they brought it within limits, the account can again be upgraded. But let us remember that this 90 days norm, continuous non-credit for 90 days, is not applicable only as on 31st of March 2022, but for any time during the year. That is the second condition. Third condition, there is the balance, the account being operated well within limits, and there are also credits, but the credits are not enough or sufficient to cover the interest debited. The master circular said interest debited during the same period, but the November 12, 2021 circular says interest debited during the previous 90-day period. So taking another example, 31st December 2021, it is not an NPA, it is a standard account. in the month of January, February, March, there are very few credits, and the total credits in the account does not cover the interest for the previous 90 days. Which means if the credits in the fourth quarter are not sufficient to cover the interest debited during the third quarter, then the account will have to be classified as an NPA account. This is a clarification again given by Reserve Bank of India, a circular dated November 12, 2021. As far as bills are concerned, any bill overdue for a period of more than 90 days, in the case of bills purchased and discounted, will be classified as an NPA. So the golden rule is 90 days. Any amount due to the bank not settled within a period of 90 days, on the 91st day, the account will become classified as an NPA. Moving on to agricultural advances. Agricultural advances have never gone by the 90-day norm. It has always been based on crop seasons. Now, what is a crop season? A crop season is one which is defined by RBI as one from the date of sowing the seeds till the material is harvested, the produce is harvested and marketed. That is the crop season. The IRAC norm says, in the case of a short-term duration crop, 2 more crop seasons are allowed before the account becomes an NPA. And in the case of long-term crops, 1 more crop season is allowed from the due date before the account becomes an NPA. Now the question then one needs to ask is, what is the short-term crop? A short-term crop is one where the period of the crop season or the crop period is less than 1 year. If from the time of sowing the seeds to harvesting and marketing is more than 12 months, which is a year, it becomes a long-term crop. Now, who decides this short-term crop and long-term crop? It is the state-level bankers committee in each state that decides this. I think it is very, very essential for us to first obtain the file that contains all the SLBC circulars. Every branch will have it. Especially branch which deals with agricultural advances will certainly have it. So if you happen to be doing the audit of a branch which is predominantly agriculture, I think you will be well served if you ask for the SLBC circular and go through the circular. In fact, I would probably go one step ahead and say that every state has an SLBC committee has a website. Please search for the SLBC Tamil Nadu site. You will come across the site, look into that circular, look at that site and see whether there are any circulars which are of relevance to us to understand crop seasons better. And it also contain several more circulars of there being a natural calamity in a particular district, because of which the bank on its own volition can restructure certain agricultural advances. Those kinds of circulars are available in the site. Please look at them. If you are unable to locate those kind of circulars, please ask the branch where you are going as to what those are, what are the circulars issued by the SLBC during the year. Please have them by your side when you do an audit. When is the agriculture advance interest application? It is available here. This is nothing but a snapshot that I've taken from the Institute Guidance Note 2022 edition. Put it there. In fact, I would beseech all of you, whether you get an agricultural branch or not, to read through the chapter on agricultural advances of the ICAI Guidance Note, because it gives us a lot of knowledge as far as agri advances are concerned. This is interest application for agricultural advances, not necessarily, not just crops, but even others like dairy, poultry, goat rearing, and piggery. Please look at this. The RBI has defined crop season as a crop season means the period up to the harvesting of the crop size. The asset classification must assume that there's a normal crop, and therefore it's based on this particular thing. Now, they also, when the Maharashtra's SLBC asked for a clarification on the crop season, RBI came up with a clarification. The clarification says a loan may be treated as NPA immediately on completion of 2 crop seasons or 1 crop season, depending on whether it is a long-term crop or a short-term crop, after the repayment due date. So if the due date is 1st of January 2022, 2021, and if the short-term crop of, let us say, 8 months, then 16 more months is added to it before the account becomes an NPA. If it is a long-term crop of, let us say, 13 months, then to 1st of January 2021 due date, 13 more months is added before the account becomes an NPA. This is a clarification given. There is a table given by the Institute of Chartered Accountants of India where they give you an example of when an account agri loan becomes an NPA. They've spoken about the sanction date, they've spoken about the harvesting time, the repayment due date for both short term and long term, like kharif crop and rabi crop, sugarcane, banana, all that they've given. However, they've also added a line at the bottom of this table. This is available in the guidance for 2022, page 348. And this is not 2021 edition. It is a 2022 edition, page 348. They have given an illustration and they have stated the illustration given above is for guidance only, and the facts may be verified with reference to each case in hand. Why is this line put there? The crop season differs from state to state. The crop season followed in Tamil Nadu might not be the same crop season in Andhra or Kerala, although they are our neighbors. Therefore, to understand the crop season and to be very clear about what are the crop season available, I mean, what are the crop season applicable for the state of Tamil Nadu or whatever state, whichever state I am doing the branch audit, I need to have the circulars of SLPC. It is only those circulars which can clarify the point as to when an account will become an NPA, because they would have in their circular stated what are the crop season for Tamil Nadu, what are the due date for loan sanction from in 1 quarter, when does it become due, and from that date how many crop season, I mean, what are the crop season that needs to be added depending on short term or long term is something we can look at. But the crop season per se and the cropping patterns are decided by the SLBC, and therefore we must certainly have that filed before we come in for audit. What happens to agricultural advances which are affected by natural calamities? RBI has permitted the banks to have its own policy and decide on relief measures for these agricultures who are affected by normal calamity. But again, this also has to have the approval of the state level banking committee. SLBC is something which definitely needs to look into this, and that is why I keep on reiterating that SLBC file is very, very important. I have also given you the circular reference. Based on the master direction given the circular, every bank can have its own policy on how to deal with agricultural advances which have been affected by natural calamities. Let's take the case of a borrower who has not submitted stock statements for more than 3 months. Everything else is perfect in this account. The account is performing properly. There is a regular account, deposits and withdrawals in the account. It's a CC account. Everything is fine. The summation of debits and credits is healthy, but the stock statement is more than 3 months old. Except in the case of those loan products where the bank has not stated in the sanction letter that a stock statement needs to be given on a monthly basis, we need to look at those accounts where the stock statement is older than 3 months. Why? RBI is very clear in their circular. They say the drawing power that is computed on a stock statement which is more than 3 months old should be taken as 0. So if there is a stock statement available as of 30th September 2021, the drawing power can be calculated for the month of October, November and December. On 1st of January 2022, the drawing power calculated based on the stock statement as of September 31st is invalid. It should become 0. So if it becomes 0, the account will become, and if that position continues for another period of 90 days, the account will become an NPA. So as an auditor, my first job is to see that the stock statements are available at least till November or December, because the drawing power can be worked out for January, February and March based on a stock statement as of December. So that should be available. Am I happy with that? I don't think I'll be happy with it, because the continuous process, the continuous monitoring, although I might not classify the account as the SMA account or as the NPA account, I will consider that it is important to make a remark in a long form audit report, especially if I see that there are several CC accounts in the branch where the stock statement is only till December and they have not obtained for January, February, March. Then it means there's systemic error in terms of monitoring, which is something which I need to comment in my long form audit report, and therefore I will look at those cases very carefully. Again, one of those few first things that I ask when I go into a branch, just as I told you SLBC circular for agricultural account, I will ask them for all the list of stock accounts where the stock statement is before 31st December. I will then ask them for a list of accounts where the sanction expired as on 30th September 2021. Why am I asking for the list of sanctions which expired in September 2021? RBI in the master circular say an account which is expired must be renewed within a period of 6 months. If it is not renewed within a period of 6 months, even though the account is performing, even though every other thing might be altered to the account should be classified as a non-performing asset. Which means as on September 30th, 2021, if a sanction has expired, it should be renewed before 31st March. I have come across several cases in the last 25 years of doing bank audits where they will give you all sorts of reasons. They'll say, "Sir, we have short reviewed it, we have ad hoc reviewed it." They'll use all sorts of terms to say that it is still performing, although it is well past 180 days from the date of expiry. The short review, interim review, all this makes no sense. These are terminology used with the banks. RBI in the circular say, we understand that borrowers will have difficulty, especially large borrowers will have difficulty in giving the CMA data, the stock statement, their audited financials, and therefore we are giving them time of up to 180 days. So RBI has already taken into account all the excuses that will come from the borrower and the bank, and they have fixed 180 days. So if an account which is expired or the sanction has lapsed, that is not renewed within a period of 180 days, on the 181st day, the account will be classified as an NPA, irrespective of the fact the account is performing properly. The third condition is something which we already saw. Again, it should not be before the balance sheet date. It should be solidly or very few credit in the account at any time during a period of 90 days. So that is enough for us to classify an account as NPA. So let's move on to restructuring. But before moving on to restructuring, I would like again to pose the question to the participants in this webinar. Just give me a second.
So I have compiled few questions.
Hello?
I have combined few questions. So shall we have it now or will
I'd like to do the question at the end of the session. Okay?
Yes. Yes.
Yeah. Thank you. I'm looking at the repayment in a term loan account. I'm going through a term loan account and I find that the repayment of the term loan account was to commence from, say, June 2021. And at the request of the borrower, based on certain hardships he is facing, the branch has stated, okay, instead of June 2021, it is enough if you start repaying from, let us say, January 2022. That's one case. I immediately tell the branch, look, you have restructured this account, it must be downgraded. The branch immediately comes up with an answer saying, sir, we have not restructured the account, every other thing is the same, we only rescheduled it or refaced it. Bankers, I think, are fascinated with these two words, rescheduling and refacement. They don't like the word restructuring. In my opinion, it is restructuring. In the opinion of the branch, it is reschedulement or refacement. I look at an education loan or a housing loan where the tenor from 120 months has been increased to 130 months or 140 months based on a request to the borrower and also their own appraisal of the request of the borrower. Are these cases, the two examples they gave, are they restructuring or are they refacement? In my opinion, which is substantiated, I won't even say my opinion. In the view of RBI, these accounts are restructured accounts. Because according to RBI, whenever a bank gives a concession, whether it's economic or legal or for whatever reason, they give a concession to a borrower, which they don't give to other borrowers, then that amounts to restructuring. If the bank reduces the term loan on all the interest rate on all housing loans by 50 percentage points, it will not amount to restructuring because there is a concession or a benefit given to all the borrowers across the board. But when it is done for a particular borrower, it is a concession, special concession given, and that will amount to restructuring. I think we need to be very, very clear about this. Again, in my experience of bank audits, I've come across several cases, literally almost 2 or 3 cases in every branch that I've audited, where they will argue that it is refacement, I will argue that it is restructuring, and finally, they will have to agree with me, or even if they don't agree with me, I will downgrade the asset giving my reasons for it in the MOC. So let us look at exactly what restructuring means. And I would like to read exactly what the words of Reserve Bank of India is. Restructuring means modification, which is change of terms of advances, including alteration in repayment period, repayment amount, amount of installments, and rate of interest. So if the repayment period of 120 months is shifted to 140 months, or the repayment amount which is monthly fixed at 5,000 is now made 4,500, the minute you make an EMI which is 5,000 to 4,500, then obviously the tenor is going to increase. So 120 months will go to 140 months or 138 months. Amount of installments or the rate of interest, it will amount to restructuring. Unfortunately, the word restructuring is associated with banks only with regard to corporate loans. Education loans are being restructured, housing loans are being restructured because the bank, if you go by the definition of restructured account as far as RBI, given by RBI in the Master Circular, there are lots of restructuring done at the branch level. And in fact, we as professionals, forget the banker, even we as professionals, always seem to associate restructuring with corporate loans and with large size branches. There are several small branches or medium-sized branches where they have education loans, personal loans, housing loans, which are getting restructured without a downgrade in the asset classification. I think we need to definitely look at that during the course of our audit. So let's be very clear. Restructured account is one where there is a concession given to the borrower, whether he asks for it or on volition or on the volition of the branch itself, which concession is not been given to any other borrower or to a group of borrowers or a section of borrowers, will amount to restructuring. Before I move on to other key points in restructuring, again, one more question. An account gets restructured, which means it needs to be downgraded. When can the account be upgraded again? That is the question. Now, RBI says it can be upgraded after satisfactory performance for a period of 1 year. They say specified period, and they define specified period as 1 year. In my audit of restructured accounts, almost every year, the branches I have audited, accounts which are restructured in the previous year would have been upgraded, they would have downgraded either on their own volition or on the instance in the previous statutory audit, they would have downgraded, but they will upgrade it exactly 1 year from the date of restructuring of previous year. Take an example. An account was restructured on 1st of January 2021. Invariably, you will find that account will be restructured on 1st of January 2022, would have been upgraded as on 1st January 2022 because RBI circular says talks about 1 year. But that 1 year also has certain other connotations. RBI says a period of 1 year, not from the date of restructuring, but from the commencement of the first payment of interest or principal, whichever is later on the credit facility with the longest period of moratorium under the terms of restructuring package. Let's take a simple example. Going back to 1st January 2021, account is restructured. On restructuring, the branch correctly has downgraded and classified as substandard last year. The restructuring sanction says there is a 3 months moratorium for payment of interest and a 6 months moratorium for payment of principal, which means the first 1 year of satisfactory performance will not come in from 1st of January, but will come in from 30th of June 2021 because there are 2 moratorium periods, one for interest and one for principal. And whichever is later is what you have to take. The later one with the principal on the date commencement of the first payment of interest or principal, which is later, is what it said. Therefore, if the first payment of principal is due only in July, only from that date, a period of 1 year will commence, and not before. Even assuming there is no moratorium given, the first date of payment of principal or interest might be only 31st of January, not 1st of January 2021. I think that is something which we need to look at. Gets missed out most of the times. We should take a very close look at restructured accounts to ensure that the upgradation has been done properly and not at an early stage. These are again, satisfactory performance in the case of non-agreeable cash credit accounts, non-agreeable term loan accounts, all agreeable accounts. What are the what we mean by satisfied performance is displayed on the screen. I won't go into it in detail. In all these cases, the same thing applies. In the case of non-executive loans, I already spoke to you about that. The only thing that I did not tell you is the year start from that, but satisfactory performance essentially means that for any period of 90 days, there should not be any overdue at the end of the fiscal year. So that's something again which we need to note. Moving on to project loans, as I said earlier, I'm not going to spend too much time on project loans because they are large loans, invariably dealt with by large branches. But let us remember one thing as far as project loans are concerned. Essentially, a project loan is one which is a long-term finance, infrastructure finance of industrial projects, and these projects are based on projected cash flow rather than the balance sheet of the borrower. There must be a date of completion and a date of commencement of commercial operations. These two dates will be decided before financial closure, must be documented and form part of loan documents. Have they done that? First thing that we need to verify is whether that has been done. We also understand, and we also understand, that in case of project loans, that could the completion of projects can get delayed due to various factors, some which are under their control and some which are not under their control. Things that are not under their control is legal disputes, delay in obtaining clearances, and so on and so forth. In such a situation, RBI says banks may restructure without downgrading the asset. What can they restructure? They can restructure project loan for infrastructure and also for non-infrastructure. So when it comes to project loans, RBI says if there's a delay because of factors within their control or outside their control, the account can be restructured without downgrading our asset. And how is it done is what we're going to see in the next slide. Now, this is the case of deferment of date of commencement of commercial operations. It will not be treated as restructuring and it will be classified as standard, provided the revised DCCO falls within a period of 2 years from the date of original DCCO stipulated for infrastructure projects, and for non-infrastructure projects, it is 1 year period. The conditions are the revised repayment period should be equal to or shorter than the original repayment period. In other words, another moratorium is being given of 2 years for infrastructure projects and 1 year for non-infrastructure projects. But the tenor of the loan cannot change. In other words, the repayment term is, if the repayment term is extended, it will amount to this. The original sanction said 10 lakhs, but 10 lakhs was 10 years, 10 years to start from the date of commencement of commercial operation. The commercial operation itself is extended by 1 or 2 years, depending on whether it's an infrastructure project or whether it's a non-infrastructure project or an infrastructure project. But the repayment term should continue to be 10 years. The amounts can vary, but the repayment tenor should continue to be 10 years, in which case it need not be considered as restructured and can be classified as standard. Now, restructure projects beyond the control of the promoters, up to 1 more year is given for projects, and non-infrastructure up to 1 more year. Total extension 2 years for non-infrastructure projects and total extension 3 years for infrastructure projects. Again, the same conditions are there. The conditions need to be fulfilled. So if you do have a project loan in your branch, please look at the IRAC circular. Very, very simple and very clear understanding of that is there in the circular. I think we need to look at it. And if it is classified as a standard asset, a provision of 5% is required for it, unlike other standard assets. Involving court cases, they have given 2 more years, total extension of 4 years is given for only infrastructure project. For non-infrastructure project, court cases are not applicable. Only for infrastructure projects, court cases are applicable. Moving on to the next slide, income recognition. Income is recognized only on recovery. It can be accrued only if it is proper as a standard account. For non-performing asset, it is only on recovery. It is not applicable to advances like a life insurance policy, NSC, IDP, because they're all extremely secure. But then, even in those cases, they have said there must be a requisite margin obtained. Now, how do I recognize income in case where moratorium has been granted for payment of interest. As per the November 15, 2021 circular, banks may recognize interest on accrual basis if the account is standard. So where there is a moratorium for payment of interest, you can recognize it on accrual basis, otherwise it is only on recovery. What happens in an account which is classified as an NPA during the year? In respect of those accounts which have been classified as NPA during the year 21-22, the unrealized interest must be reversed of not only unrealized interest of the current year, but also unrealized interest of the previous years. They cannot be reversed, but they must be provided for. And they have used the word previous years, not previous year. So we need to look at this. Let us say we are looking at the NPA accounts. We find one account has been classified as NPA in August 2021. Then immediately what we do is we look for whether the unearned interest from April to August has been reversed. Invariably today, I think the system does that. It reverses the unearned interest and passes the NPA. But what about unearned interest, if any, of the previous year? In my opinion, the system does not do it. We need to look at it manually, calculate it, and provide for it in MOC. So the question arises is, how can there be unrealized interest in the previous years? There can be. It can so happen that the account should have been classified as an NPA even earlier, not classified, or there could have been moratorium on payment of interest, and therefore it did not become an NPA last year, but there is unrealized interest in the earlier years. Once an account is classified as NPA, if I was doing the audit, I would definitely look at the previous year to find out whether there is any unrealized interest. And if it is there, I will make a provision for it. Now, what happens to accounts? I spoke about moratorium of interest. So, what happens to account where there has been a moratorium granted on payment of interest? Again, the November 15, 2021 circular is very clear. It says in cases where moratorium of interest is permitted as per the original sanction, if the loan becomes NPA after the moratorium period is over, the capitalized interest corresponding to the interest accrued during moratorium period need not be reversed. So as long as it is within the moratorium period, as long as there is a moratorium period and the account becomes an NPA after the moratorium period, the interest which has already been capitalized, accrued and capitalized need not be reversed. But if there is no moratorium period, it needs to be reversed. Second, even in the moratorium loan, if it becomes an NPA during moratorium period itself, it has to be reversed. This is a very, very important clarification given by Reserve Bank of India in their November 15, 2021 circular, which we definitely need to take a look at. I don't remember the circular reference except for the date. Please note down it is the November 15, 2021 circular. Please look at it and go through it before you commence the audit of the branch. I think we are all very clear about non-performing assets, substandard, doubtful, and loss. An account which is substandard is one which has been an NPA for more than 12 months. From the date on which it becomes NPA, it becomes substandard and it will be there for 12 months. The minute it crosses 12 months, a substandard account will become a doubtful asset. A loss and it will continue to be doubtful till it becomes either a loss or it is upgrade, or it is resolved, or a compromise settlement is reached. A loss asset is one where it is not recoverable at all. The question of recovery of the advance is extremely in doubt. That is the losses. Now, I told you that an account, when it becomes an NPA, will be classified as substandard, and after 12 months, it will slip to doubtful. Now, does it have to follow a timeline? It need not necessarily follow a timeline. Although the general rule is an account will be classified as substandard on becoming NPA and doubtful 12 months after that, there are also cases where an account on the date of NPA can become a doubtful asset. Because if there has been an erosion in the value of securities, the original securities given, if there is an erosion in the value of the security more than 50%, the account should be classified straight away as doubtful and not as substandard. And if the erosion value is more than 90%, it has to be classified as lost asset and not even as doubtful asset. So, while the general rule is it will follow a time plan of substandard, D1, D2, and D3 and continue to remain in D3, because by the time it reaches D3, 100% provision has already been made. It can also happen that without following a timeline, an account will be classified as doubtful or lost depending on the erosion of the value of security. Please note this. This is very important. A loss asset is one which is uncollectible, as I told you earlier, and therefore it's been identified by RBI, concurrent auditor, internal auditor, statutory auditor, branch itself. Any identification, it should be considered as a loss asset. I'm not going to spend too much time on asset classification. This is one thing which I need to talk about. Asset classification and consortium. Now, let's say 5 banks have got together and are lending money. One bank is classifying, the leader of the bank is classifying it as performing. I do know the other 4 banks need not classify it as performing. They will have to classify it as performing or non-performing based on the record of recovery in their books. So if the branch manager tells you, sir, we are not the lead bank is already classified as performing, so we are also classified as performing, don't go by his word. RBI says every branch should determine performing or non-performing based on the performance of the account in their branch. The only concession RBI has given is in case the leader has collected the amounts due from the borrower, but has not passed it on to the member banks, but has given a letter wherein they are confirming that this is the amount we have collected, this is your share, and if that share, according to the letter, is enough to meet the dues of the bank that you are auditing, then you can classify it as standard, otherwise not. But please insist on a letter, because RBI themselves said only the letter can the other banks go by it, otherwise not. In multi-branch financing, it will obviously be decided by the main branch. I am doing the audit of a branch in Chennai where one corporate has a main account. It is my duty to classify the account as a performing or non-performing. Now, this corporate could have an account in Tirunelveli where they have a factory. It's a sub-limit, and the auditor of that branch and the branch will follow this branch classification or my classification. They don't have to necessarily do it on their own. It will only be done by the main branch. That is what will be essential to note here. Only thing is, if you're doing the audit of the branch where there are sub-limits, then you need to insist on a certificate from the main branch, or at least a letter of confirmation that the account has been classified as performing. Now, there are government guaranteed accounts. An account should be classified as NPA if the guarantee has been given by state government, where this guarantee is invoked and has not been paid within a period of 90 days. What about central government? RBI says in the case of central government guaranteed loans, you don't have to classify an account as NPA if you have invoked it and 90 days pass. You can wait till there is a repudiation by the central government. Repudiation is refusal to pay. Till that date, you can wait. I, as an auditor, if I'm faced with a situation like this, will certainly insist on a specific letter of representation that the central government has not repudiated the claim, to be signed not by the branch manager but by the authority who sanctioned the loan, because the branch manager is just as ignorant as I am as far as whether the central government has repudiated it or not. Therefore, this letter of representation is a must before we agree to the classification by the branch. Now, one question that again that I would like to ask all of you is, whose responsibility is provisioning? Is it the responsibility of the branch? Is it the responsibility of the bank? Is it the responsibility of the auditor? Whose responsibility? In live seminars, when I ask this question, I come up with the participants come up with various answers. They say, sir, it is not for us to, it is not our responsibility to make provision. We need to ensure, we need to check whether the branch has made provision and whether it is right. Some people say it is the branch which is responsible, some people say it is the bank which is responsible, and so on and so forth. But let us look at what RBI says as to responsibility, who is responsible for provisioning. RBI in its circular says the primary responsible for making adequate provision is that of the bank management and the statutory auditor, which means we cannot brush away our responsibility saying we missed it out, the branch did not provide, we missed it out. Let us remember today that there are disciplinary cases coming up even in the case of branch auditors for not making adequate provisions as per the IRAC norms. And therefore, we should be guided by this particular paragraph that is there in the master circular, where the onus of identifying and making adequate provision has been cast both on the bank management and the statutory auditor. We need to ensure that it is done properly. I think we'll come to these are nothing but provisioning norms where I will certainly circulate this presentation to SIRC, who will then probably send it to all of you. These are nothing but the amount that needs to be provided with a ready reckoner at the end of the year, at the end of this presentation, as to if you know the NPA date, this table will give you what is the amount of provisioning that has to be made. Thank you very much for a very patient hearing. I hope you enjoyed my presentation as much as I enjoyed presenting it to you. And I'm ready for any questions now. Thank you.
Yeah, thank you so much, sir. I'll share my screen right now, sir.
Yeah.
Is my screen visible, sir?
Yes.
So we have compiled around 10 questions.
Yeah.
So as for the time limit, we'll try to finish the questions as early as possible. And other questions I will mail you, sir. You can answer that, sir.
In fact, my request would be if you mail all the questions to me, I will get you the answers tonight, because I'm really having a very bad throat. I'm not even able to talk. So if it is with you, with Mr. Sundarajan sir and with Mr. Niranjan Joshi, I think my mouth has become totally dry. So it will become, but maybe I think I'll take one or two questions live and then answer the other questions through a mail.
Yes.
You want me to read the question and the answer, or would you read the question?
Sundarajan sir, can you read the question, or I will read from my answer? Yes.
Monica, I'll read the question. Not a problem. I'll read the question.
Yeah, I can read the question, sir. Not a problem, sir.
Yeah. Okay.
First question is whether in CC account, as per out of order definition, the credits in the account should be sufficient to cover interest debited. Hence, whether all interest debited, including which is debited on 31st March 21, also needs to be served by the credits in the account within 31st March 2021. Banker view is each interest will have 90 days time for recovery.
Okay. Quick question. The Master Circular says the interest debited in the previous quarter should be serviced before the end of this quarter. And this clarification that came out on November 15, 2021 also talks about this. They say the credits in the account should be sufficient to cover the interest debited in the previous 90-day period. So if we are looking at the fourth quarter, in my opinion, if the credits there are sufficient to cover the interest debited the previous 90 days, for example, the credits in January and February should be sufficient to cover the interest debited 90 days before February 28. So which means from December, January and February should be cleared out by February. That I think is right. Mr. Niranjan Joshi. Yes, Mr. Niranjan, please unmute yourself.
I would like to add one small clarification to this. Am I audible?
Yes.
Yes, sir. Yes, sir.
This particular point is not applicable for working capital limits. It's applicable for term loans. And what Ramesh sir told is about para 2.1.3 of the master circular, where this provision is there, but not in case of working capital limits. So as per para 2.2 of the master circular, 1st July 2015, what sir told in his presentation is absolutely to be followed. If it is not due and that balance sheet debt portion is already carved out and it is no more applicable, and he also mentioned it during the presentation that now it is on a daily basis, they will have to work out on a back dates 90 days. So this particular view of the banker is absolutely not in line with master circular, is my opinion. It is applicable only in case of term loans, but that also bankers are not following. They will go by 90 days norms as clearly mentioned by Ramesh sir in his presentation. So the auditor will have to go to the bank and say that, boss, this does not apply. Show the copy of the master circular.
Thank you, Mr. Niranjan. You saved some pain for my throat. Thank you so much for the clarity.
Yes, sir. Sir, you want to read all the 10 questions, or if you have a sore throat, we can have it later.
No, I think we'll go for another 2 questions, sir. If Mr. Niranjan has the time, we'll go for another 2 questions.
Yeah, another question.
Yeah, you can take, sir. I'll tell you, sir, my thing is, this is the most important topic everybody is interested. Loans and advances and IRAC. So I'll be happy if Ramesh sir can take 1 or 2 more questions. I will try to adjust some of my slides which can be used by them during their reading at the office, because this is something which 60% of our time, like in my presentation I'm going to share that we spend 60% of time in only advances in IRAC. So it will be injustice for the participants not to have an answer from Ramesh sir. We can take two or three questions, or whatever your choice. I'll adjust 10-15 minutes here and there, not a problem. Please go ahead, sir. Go ahead.
Yes, sir. Thank you, sir. With respect to COVID regulatory packages, only installment is deferred in respect of term loan. What about the other charges debited during the COVID relief period? Will such other charges has to be adjusted against the receipt which are received after August 20, or whether same can be deferred as installments or deferred?
The RBI code circular package said installment of principal is deferred. All the interest that is debited there needs to be settled as soon as the period is over and has to be paid off. Now, some of the banks, I believe, have taken a stand that interest is also clubbed along with the principal and adjusted the EMI for the remaining tenor, not exceeding 6 months from the original date of sanction. Now, I think the most important debits in the account, in case of terminal account, of the interest. Other than that, there will be inspection charges and things like that, which again, in my opinion, would not have come in during that period because the entire country was on a lockdown at that period. Therefore, the chance of any other debit coming in might be very, very negligible or a very small amount. I don't think that should be a very big problem, but there could be a problem with regard to the interest debited, because RBI said interest will continue to accrue. People went to the Supreme Court, the Supreme Court also finally said interest will continue to accrue, and therefore the period of the interest that has been debited from March to August should either be paid as soon as the period of deferment period is over, or it should be clubbed along with the principal and adjusted in the EMI, which means the EMI has to be revised so that the tenor does not exceed more than 6 months from the original tenor.
So according to you, it is only for the EMIs and not for the charges?
Charges, as I said, the charges that will debit the term loan account could be very minimal. I think we can take a stand on that.
Yeah.
Interest is the largest component in the term loan account, the debit component.
And sir, moreover, I would like to add one more point here, is that these charges during that particular period have been already accounted for, whether it's PA, NP on 31st March 21. So for 22, this will not be an issue at all, whether they have debited anything to a particular account or not. And if they have deferred it, then for COVID, I think we also should take the same view as RBI has taken, and we must pass on this benefit of deferment, whatever nature, to those borrowers,
Yeah, for this August 2020, as we say, it would have gone for 31st March 21 itself.
Yeah. Already gone.
Already accounted for, audited, done, for this time will be very rare, exceptional case where an account would come for an upgrade or something like that. It would be a one-on case, like it will not be a common thing for us during this March 22 audit.
Absolutely. That's the only reason why I said in my presentation that if you look at a term loan account and you find that the original tenor ends on a particular date, see that the revised tenor does not exceed more than 6 months. If it exceeded more than 6 months, then in addition to the COVID circular, either they have misunderstood the COVID circular and they increase the tenor, or in addition to the COVID circular, they have given some more restructuring, which will amount to restructuring and downgradation. That's what you need to look at.
So exactly, if the account is to be classified as NPA, then this amount, if not realized, should be reversed. That's the only thing pending out from that circular today.
Any unrealized
nothing
amount
pending. Agreed.
Yes, sir.
Agreed.
Yes, sir.
the
next question is for 21-22. The OCC account shows a balance of 15 lakhs throughout the year, and the company had paid promptly the interest. The DL of rupees 15 lakhs was based on stock statement submitted as on 31st March 21, but based on the audited statement which was furnished in September 21, the DL should have been less than 15 lakhs. It means the branch should have changed the penal interest. Is this account NPA?
I think it's an extremely important question. In fact, I often speak about this when I do audit of advances. Where is the monitoring of the branch if they have not even taken the audited financial statement submitted in October and compared the stock figure in the financial statement with the stock figure given as on 31st of March in the month of April. If they have not done that and called for an explanation to the borrower, obviously monitoring has failed. Now, if there is a significant difference, to the extent that it affects the drawing power, I think as an auditor, I am well within my right to say that they did not have DP, calculated from the stock statement they have given, reduce the difference in the closing stock between the stock statement and the financial, work out the DP and classify the account as an NPA. Forget the penal interest. Penal interest is one portion of it. The account itself has to be classified as the NPA. In my opinion, if there is no drawing power or the drawing power is less than what the bank had worked out based on a stock statement, but based on the audited financials, if the DP is different and because of that account becomes an NPA, I should classify it as an NPA and reverse unearned interest, and therefore not providing, penal interest not having provided for is a smaller issue. I hope more and more auditors look at this. This is an important aspect, and this is a problem in very many branches, especially small size branches, or I would say branches up to 60-70 crores of advances. This is a perennial problem. We have come across this several times. We have classified the accounts as NPA. Please go ahead, work the DP. It might take a little more time. You will have to spend about half an hour looking through 12-month statements. In addition, please also look at the stock audit file if it is available. Take that. See whether there is something there which also has to be removed from the stock figures and rework the DP. If the branch are unwilling to do it, please do it and then arrive at a professional judgment as to whether the account needs to be classified as an NPA or not and go.
Hello, sir.
Yes,
Am I audible, sir? Sorry.
No, you're audible. You're audible.
Yes, sir. You're audible.
Yes, sir. Yes, sir. Shall I go to the fourth question, sir?
Please, sir.
Yeah. For agree gold loans, if the loan is more than 3 lakhs, interest subvention is not available. If loan is more than 3 lakhs, then interest subvention. If loan is more than 3 lakhs and the earlier one is less than, okay, subvention is available for 3 lakhs, or the entire interest is on loan is not available. Can you explain, sir?
I'm not very sure about it, but I think the second statement is right. If the loan is more than 3 lakhs, then for the first 3 lakhs, interest subvention is available and not available for loan beyond 3 lakhs. In any case, I will check this out, and if there is a mistake in what I said, I will send a mail to SIRC, which can be circulated to the participants.
Yes,
This is correct, sir. What you said is absolutely correct. Only up to 3 lakhs, the interest subvention will be available.
Thank you, Mr. Joshi.
Yeah, thank you, sir. Thank you, sir. Monica, can you rise? Because I'm not able to see the fifth point.
Yes, I thought.
Yeah. For 21-22. Yeah, the next question is for 21-22.
No, I think
the OCC account shows a. I think this was already put.
Yes, it is answered already. Question number 3 is the same as question number 5.
Yes, sir.
Fifth one is the repeat one.
Absolutely.
Yeah, 3 and 5 is same. Sir, yeah. Sixth question is, some banks are collecting stock statement only once in a year for certain OCC limits, say below 25 lakhs. Are there any RBI direction with regard to period of collecting stock statements?
To my knowledge, there is no RBI direction with regard to collecting stock statements. The loans that you're talking about are small businesses where they might not be in a position to maintain. And therefore, as I told you in my presentation, that some banks have designed products whereby for that product, it is enough if it is submitted once a year, and therefore it need not be submitted every month. I think it's a perfectly valid thing as long as the board policy says that. I'm not questioning the business decision of the bank. The board policy is clearly that for this particular product given to a small businessman, somebody who is selling idlis on the road, who has a food cart, he doesn't give you a stock statement on a monthly basis. Not possible for him. Taking those things into consideration, they are given this. I think it's perfectly fine. But the product and the sanction letter must state so. Talking about periodicity. Now, what happens in the case of people who do not submit a stock statement on 31st of March, which can be compared to the audited financial, but give one as on 20th of March or as on 10th of April. I think there we have a right to question. What is the policy of the bank? Does the bank policy allow the branch to obtain a stock statement on any date that the borrower wants, or is it at the end of the month? In my opinion, it should be at the end of the month. Most banks have that policy, and therefore, if somebody had given a stock statement on March 20th, instead of March 31st, because he knows that the stock statement of the March 31st will be compared to the financials, then I think that is blatantly wrong, which we need to bring it to the light of the regulators.
I think it should be on the last day of the month, no, sir? Yeah. Shall we go to the next question, sir?
Please, sir.
Yeah. All of us know this year for a reason known to us, tax audit report could be given to banks only in March 2022 to the clients or banks, leading to delay in renewal. How to proceed for non-renewal more than 180 days norms?
Well, I am not the person competent to answer this. As far as I am concerned, I am only guided by the Reserve Bank of India circular, which is 180 days. They have not taken into consideration that there is a problem with the income tax portal, and therefore it needs to be distinct. Unless Mr. Niranjan Joshi has some circular which says it can be given. Please, sir.
Yes, sir. Joshi,
There is also one circular dated 21st of August 2020. That is an exclusive circular about this 180 days norms for non-renewal of loans. There has been tremendous effort by various auditors over last 20-30 years on this particular point. For the first time, the Reserve Bank of India in a written circular has acknowledged, and I think Ramesh sir has correctly said it, my master circular says 180 days is the time permitted. So that circular reiterates this, that doing a short review for a period more than 180 days doesn't absolve the bank from avoiding that account from slippage, So what banks are doing is they're doing it without the tax audit report based on the audited statements, because audit may be complete before filing the income tax returns. So that is one area. Otherwise, they are going based on the provisional statements, but banks will have to do it. The assumption itself is for only few clients where there is a delay in tax audit report submission, because tax audit report is not the only criteria. I agree that in case of non-statutory audits in MSME sectors, this would be the only basis of financial statements. But there is one 1985 circular which says that for advances about 10 lakhs, about 20 lakhs, there is a standard format prescribed, and there is a separate guidance note also issued by ICAI on that. So those financial statements can be submitted to the bank and the renewal can be done. So some of the banks have done it, but I think the query should read that 21st August 2020 circular to have more clarity. There is no dispensation given, and there is a harsh provision for classifying such accounts which are continuously delaying the renewal process.
Thank you, sir. Thank you, sir. Sir, I'll go up to 10th question, sir. Then I'll stop because there are a lot of questions. Because the other man has to also have to give his speech, continue the speech. I'll go up to 10th, sir. 8th question is, bankers are giving principal holiday for initial months. Does this also mean restructuring?
I would rephrase the question. I think the way I am understanding the question is, in there is a moratorium given or a holiday given for repayment of principal in the first 2 months of the loan sanction. This is exactly what we call moratorium of principal. This will not amount to restructuring because the sanction letter says that you need to start repaying only 6 months later. The restructuring is one, after the loan has been sanctioned, it is performing, suddenly it is the course of the loan performance, concession is given. That will amount to restructuring. This is the one which is given right at the beginning. There is no question of restructuring a loan even before the loan has been sanctioned and given. Therefore, that will not arise. This will not amount to restructuring.
That's right. Thank you. All this holiday period and interest concessions is provided during sanction of loan. Does it still mean alteration or change after sanction be considered as restructuring?
Exactly the same.
Ramesh has already answered this question.
There is a sanction. The account is being operated according to the sanction, and after lapse of time, the time could be 3 months, 4 months, or it could even be 2 months. But only the sanction after the original sanction, which gives the concession, will be considered the restructuring, and not the original sanction itself. Because if the original sanction itself is considered restructured, then the account will start as a substandard account. That is not the intention of RBI.
Yes, sir. So please give clear demarcation to identify the restructuring of loan, as the bank manager always argue that rescheduling is not restructuring.
Okay. One thing that I will tell you is, if they talk about rescheduling, please take the master circular and ask them to point out the word rescheduling. There is only one place where you use the word rescheduling. Otherwise, that word is not there, and that is also not in connect with the restructuring in advance. The restructuring in advance, the section that deals with restructuring in advance, does not talk about refacement or reschedulement. So that's completely alien concept when it comes to IRAC norms. The second thing that you need to tell them is, have you given them a concession or not? Would you give this concession to everybody, or have you given this concession only to this borrower? If it has been given only to the borrower, it is restructuring. Let the branch manager not agree with you at all. Let him continue to call it refacement. Please put this in your MOC. Let him write this dissent note in the same thing and finish it.
Yes, sir. Thank you, sir. Thank you so much for the great efforts. In spite of your pain, you have given us the answers. Thank
I
you,
have one
sir.
more to do tomorrow, sir, in Pondicherry, and one on Sunday in Nellore. Those are live, so that's the reason why I'm not able to talk for a longer period. Thank you, Mr.
Yes,
Joshi.
thank you, sir. Sir, welcome, Joshi, sir. You can continue with your presentation, sir. Thank you, sir. Thank you so much.
Sure, sir. Thanks.
I will be around listening to your presentation also, Mr.
Yes, sir.
Thank you.
Yes, sir. Thank you so much, sir. Joshi, sir, you can continue, sir. Thank you.
Yeah. I was just
Yes, sir.
opening the slide. Now, is it visible, sir?
Yes, sir. Visible, sir.
Yes, sir.
Yeah, that's good. So, good evening, friends, and at the outset, thanks to Regional Council Southern India to give me this opportunity to share my views on the subject of bank audit. My co-speaker Ramesh ji has already gone through IRAC norms, which comprises substantial portion of our audit. Nonetheless, this year there has been substantial increase in number of RBI circulars issued, and I found that two circulars already Mr. Ramesh has shared with you is the 15th November 2021 circular NPA, and there is one more circular on disclosures which have come in the month of October. Like it has substantially put an onus on the banks auditors across the country to have more focused attention area towards NPA, IRAC norms, and some disclosures. So while planning this year's audit, one has to go through the RBI website and have a look at it, how it will be configured into our audit program as such. Now, coming to this particular audit planning, primarily my focus area would be ethical compliance, compliance with standards on auditing, compliance with guidance note, compliance with revised LFR requirements, and effective reporting and certification. And maybe last 5-10 minutes or 15 minutes will spend on documentation, and especially in light of the peer review requirements in today's time which we have. So we will try to spread the time in such fashion that we cover this entire presentation in whatever time available to us. Coming to audit plan, the first and foremost important requirement and one of the expectations also is that we all follow the ethics, and the ethical compliance is a must. There are 5 basic principles of Code of Ethics as per the revised Code of Ethics of 2019 issued by the ICAI, and based on these, what we need to look into is which are applicable to us. I think if you can go through this particular slide, you will come across that the fundamental conceptual framework is given in 100 to 199 sections. The professional accountants in practice, it's 300 to 399 section, and the whole independent standard which is carved out separately is now brought into section 400 to 999. So all these 300 to 399 and 400 to 999 are the sections which are directly applicable to us. But prima facie, what I want you to look into is the 5 basic principles, fundamental principles, starting with integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. What do you mean by integrity? Is straightforwardness, honest approach, fair dealing and truthfulness, not to associate with communication or information containing false or misleading information. And wherever you come across such things, then disassociate with the above information. So you and your entire team should have integrity in your conduct, planning to execution everywhere. Also, you should have focus. So objectivity is very clear. You should not compromise on professional or business judgment. We should not, have any bias, conflict of interest, or undue influence of others. Not to undertake professional activity if any of these matters are identified during the course of our audit. Obviously, professional competence and due care. We should have the best of the professional knowledge and skill, and we should act diligently in accordance with the applicable technical and professional standards, and ensure appropriate training and supervision to subordinates also. So this is something where, if you remember in the beginning, the chairman CA China made a couple of mentions, and I was attending it, so I noted down a few things in it. And one of them was that, there is a new requirement which is probably coming up, is to have at least one CA paid employee. So the idea is that there should be sufficient hands to do or perform an audit activity. Also, professional competence means like we do a lot of other activities, and along with that, one of the activities is this statutory audit. And once in a year, this particular activity we conduct. So there is a time now that we all must update ourselves by at least engaging ourselves into some other kind of audit activity in banks, which is popularly called as concurrent audit, so that we are continuously updated with what's happening in this particular industry. And accordingly, we must have sufficient team members as per SQC 1 to have this audit undertaken in the best possible manner. Confidentiality, no doubt, we must maintain confidentiality of information which is passed on. We should not disclose it unless it is required by the law. And most importantly, the professional behavior. We should avoid activities that impair the reputation of the profession, should not make exaggerated claims and disparaging references or unsubstantiated comparison with others, and we should not advertise any professional or other facts which in violation of advertisement guidelines of ICAI. So these 5 fundamental principles, we ourselves and our team members must make sure that we are following thoroughly, and that is something which I would say that the beginning of planning for this particular activity. The second most important thing which we all should know and bear in mind before preparing and going to the audit is that we need to comply with standards on auditing. The fun with standards on auditing, friends, is that this is only applicable to us and not applicable to the bank. So naturally, this activity we can do it in advance. We can make sure that in advance we can have this preparation of requirements with respect to standards. So quickly, SQC 1, quality control for firms, mother of all standards, SA 200, basic principles, then SA 230, documentation, SA 500, audit evidence, SA 400, risk assessment and internal control, SA 300, audit planning, SA 220, probably audit quality. All these standards primarily are applicable to even this bank branch statutory audit. Then SA 299 and SA 600 primarily deals with joint audit concept or using work of another auditor. And if you see last 2 or 3 years, there has been an additional certification requirement which we all as statutory auditors are giving to the statutory central auditors, especially in case of public sector banks. So one must have basic knowledge of 299 as well as 600. No doubt SA 230 we are going to discuss at length at the end. But apart from that, this SA 310 is also something which we should look into, is knowledge of business. As I said, the first session on IRAC was very important because we spent good number of days in branch, out of which at least 50 to 60% of number of days are spent on advances and IRAC related things. Having knowledge of business, what activities the branch is involved into, and going through the entire set of RBI circulars which are applicable, and then applying it with the audit program. It's something which would be very, very crucial for all of us. Also, having knowledge of CAD tools is very important. When we used to go for physical audit, the banks used to be very reluctant on account of confidentiality for sharing the data with us. But this 2020 and 2021, 2 financial years audit experience, we have been doing audit remotely. And I think majority of us who are participants today also would have experience of doing audit remotely. I feel that March 2022, there would be certainly a better chance that we all will get chance to do audit physically. But my request to you all is that wherever you get a chance to get an access to data virtually, I think that would be very useful, because we are now used to it for the last couple of years. And once you get some data that can be utilized in spreadsheet or any other audit tool which you are using, and then certainly it would help you in analyzing the data in a better fashion. Also, audit materiality, analytical procedures, audit sampling and quality control for overall audit work is something which will be the standards which you will use during the execution of audits. So these standards would be applied when you actually go for an audit, and during the audit you would come across like areas like we discussed about NPAs. Tomorrow you will be discussing about maybe advances, or maybe say accounts of deposits, maybe trial balance, etc. Now all that where the materiality concept would come up. Well, during the discussion, we'll throw some light on how one should apply. But these are at least the basic standards one should look into. There are lots of standard checklists which are available. One of them is published by ICAI. I think I'll try to share that in my presentation as well. So one should use that to the best and make sure that the audit is being supported by standards on auditing. My personal experience is that the first time utilization of these checklists, or first time use of these auditing standards in an audit is always a cumbersome thing or bit of time consuming thing. But over a period of time, as and when you start developing a habit of using compliance checklist for every type of audit, then it becomes very easy for all of us to use this checklist. And I think we can start with bank branch audit as an activity to get ourselves acquainted with standards on auditing. In case of peer review, those who are experienced as peer reviewers, or those who have an experience to face a peer reviewer coming to your office to conduct a peer review, you would agree with me that the first thing the peer reviewer asks is about the documentation in audit. And second thing the peer reviewer asks about is the compliance checklist for the standards on auditing which the particular audit practice unit has performed during that course of audit. So that way, these are two very, very important factors one has to remember during the audit. These standards also helps us to understand how we can analyze and evaluate errors which have come across during the audit period. And then probably it would help us to go through the rectification process through MOCs. And this checklist will also make sure that we do not miss on very important points or any important points which are planned during the audit. The linkage of these with audit program and the time schedule would certainly help all of us. Audit planning starts with getting an appointment letter, an acceptance letter, then the closing manual is received, closing instructions are received. We obtain a no objection certificate from the previous auditor. Then we try to enter into an engagement letter. Up to this is a common practice. I think all of us by now are useful and now used to it. And in our other audits also, we try to do it the same fashion. Once you issue this engagement letter, certainly ask the branch about the basic information from the branch. Undoubtedly, the first and foremost important information we all take is the advances, because that define our fees or the remuneration which we are going to get. But apart from that, friends, I found that compliance with SA 300 about 310 about knowledge of business, you may issue a small checklist maybe of 20 points, which would serve as the requirement checklist for basic information to be obtained from the branch. The moment you send this information, immediately connect with the branch on a phone and inform them about how you want this information. And I would suggest that this year's audit would be no doubt physical, because for last 2 years we have been all stranded during the month of April and May, the bank audit months, due to the COVID pandemic. But this year I think a lot of things have opened up on today's date, and I'm quite hopeful that we would get a chance to do audit in physical mode as well. But there are certain benefits of virtual mode which we can continue in future also during all other audits. Based on this basic information, I would suggest that you go through the book called Bank Audit Guidance Note and appendices attached to that in Part B. And I hope by now this is available in publication counter at the branches near to you, and you must buy a copy of this. And easiest thing is to download it from the website. There are lots of programs and checklists given in that appendices, especially refer to appendices attached to Part B, which is pertaining to bank branch audit. The audit program is quite exhaustive. My personal experience is that almost for last 8 or 10 years now, I am exclusively dependent on an audit program suggested in guidance note of that particular year, and it certainly adds value to my work during the year. So I would suggest that you must download that audit program and modify it according to your branch size, your products handled by the branch, your team size, experience of the team. Also, as I mentioned, a couple of circulars in the beginning, but there are various circulars issued during this financial year, and all of them have some or the other impact on our audit processes. So go through the website, study the circulars, and prepare yourself for this one-time assignment of 8-10 days of pressure situation. Also, make sure that you attend such programs and pass that information to your team members. So after attending such programs, probably I would request that you all should go back, make a team meeting, and pass on the discussion points which we have discussed during these days, and make sure that what's happening currently, what are the types of frauds which are happening, what are the types of new products which are coming up, what are the new news items which are coming up, should be brought into our audit program or audit processes. What's happening in economy, like the war situation kind of thing is happening, and the Europe is being affected because of this. So naturally, for March 22 audit, we would certainly look for exporters who have presence in Europe, especially in Russia or the countries which are affected due to the war kind of situation. And certainly there is an impact in banking industry on that. So all our eyes would be, if you have an advantage, if you get a chance to do an audit of AD branch where there are exporters or importers from these countries which are badly affected due to war, then certainly there will be a opinion sought from you about a risk involved for the particular exposure of that particular branch. Also look for government policies, rules, regulations applicable, products handled by the bank, complexities involved in the there has been mergers happening in banking industry, especially in public sector banks. There has been upgrades on softwares. You would find that there are lots of softwares which are being upgraded from A version to B version to C higher version. So that is something which needs to be looked into. Look for the closing guidelines and check the applicability of accounting standards, change in accounting policies in a particular bank and how the bank has dealt with it. Also look for how your auditing standards would fit into the scheme of things. If you get a chance to do audit of AD branch, authorized dealer branch, look for FEDI guidelines and see whether you can configure anything from those FEDI guidelines into your audit programs. Define broadly the scope of audit, include certificates in main audit plan. My personal experience is that, like many a times when we go for audit and we finish the entire activity and we try to, wind up and come back, last moment, the branch management would come to you and say that, sir, madam, like this is one certificate to be signed. So the concept in branch managers' view is that when something is generated by the CBS or pushed from the MIS by the IT department of that particular bank, then I think it is just to be signed and given. So similarly, the auditor also would do that. But I get this experience, especially in last 2 to 4 years, is that I must tell him in advance that if at all any certificate is to be done, then it will be prepared by your team, verified by my team, and then accordingly I'll sign it. So make sure that from day one in audit program, include all the certificates which are required to be signed by you. Usually in your appointment letter, there would be certificates prescribed, or also in closing circular of the bank, the certificates will be prescribed. Make sure that for every certificate, you have a standard audit plan ready. By and large, there is a gap between what is certification and what is an audit. I would be sharing my presentation points on the certificate, so we'll deal with that separately on that. Once you have a clear idea of what is to be covered in audit program, then certainly make sure that you link it with your long form audit report as well, because ultimately the entire hard work put in by your team is being monitored based on areas which are being commented in your long form audit report or as a qualification in your main audit report. So identify these trust areas like fraud, sundry assets, suspense, inter-branch reconciliation, contingent liabilities not acknowledged as debt, and all these bring it into the main audit program and give proper guidance to your team members that how you would be testing them and what would be the maturity level for all these standards. Like for advances, I'm going to share with you my ideas on how the maturity level should be set out. But usually, for overall audit perspective, as per SA compliance, you will have to define what is your maturity level. I would suggest that anything between 5 to 10% of say profit and loss account total, or out of total expenditure, anything above 5 to 10% would be tested by you, or for any income 5 to 10% would be tested by you, or for selection of accounts for testing, the LFAR prescribes you that you take up 10% of total outstanding loans or 10 crores, whichever is higher, so that you would test. So some kind of maturity, and that needs to be documented.
Niranjan, sir,
Yeah.
can you? So the presentation is like missing. Sir. Actually, we are
not visible.
Presentation. Yes, sir. Yes, sir. We are not able to see the presentation.
Okay, I'll again link it. Just give me a second. I must have pressed any key wrongly.
Yes.
Now is it visible?
Yes, sir. Yes. Sir.
Yeah, I'm sorry. So the moment you decide that
can you make it as a full screen, sir? Actually, again, it is like.
I'm doing it.
Yes.
Is
sir,
it now full screen?
Yes, sir. Yes, sir.
Yeah. So when the audit program is being finalized, bring in all that into this particular area, so that against a particular area, the maturity level is also mentioned, and that maturity is being verified during the visits by the proprietor, the partner, the main chartered accountant who is going to sign that particular branch. Also lay down overall time schedule. No doubt in the beginning, the chairman SIRC do make a note on we should get more time. I also fully agree and endorse his views that there should be sufficient and appropriate time given to the auditor so that this audit can be performed in the best possible manner. But at the same time, once we accept the timeline as per the appointment letter, then certainly as a professional, it's our responsibility to adhere to that timelines. So that's the reason, bring that timeline also in this audit program, so that you are having a clear idea about on what date which activity needs to be completed and on which day you have to issue the audit reports. Any vague area identified during the previous year audit should be brought into as a major part of audit program. I always tell my team that my entire audit starts especially in the period when my audit for the last year is concluded. Say for example, for 31st March, if my audit is over, when I bring all my files to office and when I try to send it to the godown, I tell my team members to write down one piece of paper, maybe A4 size, and tell them that you list down all the difficulties you faced during the audit, all the deficiencies which you observed in this particular bank branch, what were the mechanisms you utilized for resolution of those queries, and after resolution of those queries, how we have concluded during the particular period and how the report was prepared. So this entire activity my team does, and that one-page paper is available for next year's audit. My personal experience is that, apart from the signing partner, no team member is, continued over a period of time of 1 year. So naturally, we become tutors. But this one page of last year's experience certainly helps us to draft this audit program to cover all these important areas, and nothing important is missed out by us during the audit. We can make smaller checklists like this. One in front of you is like verification of advances. So this would be a broader checklist for entire advances. So we'll first set up the materiality. Now materiality will be set up like 10% of total outstanding advances or rupees 10 crore, whichever is higher, we will check 100%. Anything below that, probably we'll select something, but materiality will be set 10% of total loan book. Then selection of sample. So we'll have a separate statement of how we will select the sample. We'll see maybe in the next slide. Then what was the testing of that and how you came with an observation. Then discussion with the branch manager, and then appropriate reporting in your long form audit report or main audit report, or maybe an additional note to the management. If fraud, then maybe fraud reporting to the respective offices. So this would be a broader checklist comprising 7 or 8 points. And then there could be, smaller checklists, like this particular checklist is for sample selection. So for cash credit, overdraft, term loans, import export, bank guarantee, LC, letter of comfort or buyer's credit, this would be the basis on which I would select. Overall, 10% of total advances or 10 crores, I will make sure that I would test 100%. Schematic or retail loans, maybe 5-10% I would try to cover. At least one type of each loan, like housing, vehicle, personal, against deposits, gold loan, education loan, so that overall the comfort which you want for issuing a reasonable assurance on true and fairness of the financial statements of that particular branch is achieved. Now this is again just purely based on my experience. My team does this way. You can modify it based on your experience, based on the complexity of advances involved in your branch, and then you can document this. Also, as I said in the beginning, 2 standards where a lot of communication is happening in the last 2-3 years is SBA component auditor for the statutory central auditors. So certainly the central auditors place reliance on the work done by the statutory branch auditors. So the SCAs require how the work of the branch auditor has been conducted, whether the auditor has obtained sufficient and appropriate audit evidence that work of the auditor is adequate for the purpose of consolidation. So there is a communication issued by the central auditors to the branch auditors. So one should go through that thoroughly. Make sure that wherever you feel like you should inform the matters to the central auditors, they must be reported. If there are certificates to be given to that extent, they must be issued along with the statutory audit report. Anything which needs to be significant observation, then you must write in your audit reports. Any change in accounting policy or anything you need to report. Any return confirmation, etc., required to be given by the SCAs, then the SBAs must confirm that, like independence issue, CAM, acknowledgement for use of work by SBAs by the SCAs, confirming that instructions have been followed thoroughly and the audit has been carried out. So this is something which, as a matter of compliance with the standards on auditing, all the SBAs must follow. For training for staff on compliance with standards on auditing, this is a nice publication which you can go through. You can download it, or you can buy a copy of it, and then probably use it for any other audit as well. The sample checklist which I referred to, these are available, free downloadable version. You can search these keywords in search engine and you would certainly get it. Coming to compliance with guidance note, certainly the guidance note covers a substantial area, close to 800 pages, out of which 150 or 200 pages or 250 pages are pertaining to statutory central auditors. So close to 450 pages for a study for statutory branch auditors. They cover RBI guidelines, ICAI guidelines, terms of appointment related issues, compliance with standards, compliance with certification requirements. Overall, the objective is to go through this guidance note, follow the standards, do the audit execution as envisaged, and ultimately all that 10, 12 days, 15 days work comprising of say 50, 100 man days ultimately result into effective reporting. Broadly, completion of work in an overall time schedule. Guidance note 22 edition already live, available. You can download, make use of it. Before reaching to the branch, a lot of things can be done. Like we call it preliminary work, like basic documentation you can do, preparation of audit program, evaluation of internal control based on data which you can take from the branch management. Undoubtedly, unless you come to know what are the branches, this particular evaluation of testing of controls will not happen. Also, the internal financial control over financial reporting, IFC audit report we need to issue from March 21. So that is also another area we can plan. What are the questions to be raised? We can raise to them and they can give it to us before we actually commence the audit. The audit program is prepared beforehand, and whatever is the requirement checklist, we can map it and send it to the branch so that before we actually do execution, our overall time and manpower planning is ready in our hands. So overall laying of audit plan is something which is very crucial, and this is a substantial backbone of your entire audit activity. Once you go to the branch, the first-hand feel of the branch will be through these various reports which are available, like previous year's audited returns, concurrent audit report if the branch is covered under concurrent audit, internal inspection report, RBI inspection report, other various types of reports like audit report, SMA report, maybe any kind of management report. All the compliances needs to be verified by our team, and that would be a great first-hand feel at the branch. My personal experience is that, once 70 to 80% of compliances are done, the reports are closed by the bank. But I have observed many times, you will find a lot of non-compliances, but reported as complied with. Like the borrower has not submitted a document, is a query by a concurrent auditor. Then the compliance is that we have been following up with the borrower and it will be needful will be done in this month. So compliance is done, but actually whether that document is obtained or not is something which we should look into. So what I tell my team is to configure an audit report that make a list of all these reports, at least top 5 accounts or top 5 observations of these respective auditors. I tell my team to list it down and check the compliance for at least top 5 or top 10 observations of each audit report, and that gives us a good idea about the quality of compliance at the branch. Also, as I said, there would be a mix and match this time also. So audit trail would be manual registers, records, or data shared through core banking solution or MIS. Both are to be commented in long form audit report. So make sure that you request for remote audit mode as well as physical mode. So it would be kind of combination hybrid model this time, and try to extract whatever information you can get from the branch, or you visit the branch and you obtain whatever audit trail you want to get. Many times when I read the audit report, I observe that either there is lack of adequate information or lack of adequate knowledge, or maybe lack of audit trail. And all these three are certainly limitations in my issuing an audit report. Depends on the severity of each three of them. We need to make sure that audit report comment is being configured appropriately. Now, this audit trail is something which is certainly useful from an IT perspective also. Like in the first session, we heard Ramesh sir specifying, daily marking of NPAs, and consequently on 15th November, the RBI circular has pointed out certain changes which would impact on, data now. So certainly you would get from July onwards daily NPA records in the branch. So more information for testing. So all this would become part of your audit trail, which you would be testing during this audit exercise. So go through this carefully. Also go through RBI circulars for the newcomers. I think this slide is particularly identified. For those who will be doing audit for the first time, they should look into this. This is the place where you get it, rbi.org.in, and you search for keywords like index to master circulars. And in that, this particular thing would give you notification, master directions. The current month would be displayed, and on the right hand side, you would find any older circular also you can refer to, and you can make the benefit of RBI website for going through the circulars and study it well. The most important thing is that you plan well, but execution also needs to be done, and that execution should be effectively brought into the report. So the revised LFR with additional questions, now close to 96 questions or 100 questions, 104 questions needs to be answered. Almost 10 or 12 questions added in advances, 10 or 12 questions added in only IRAC norms. Earlier, there was only one question in IRAC norms prior to 21. In 21, we have 12 questions directly pointed towards IRAC compliance, and they are to be answered. So that this entire planning activity is such that you link it with your execution, and that execution should be linked with effective reporting. So what I suggest is, I suggest my team to carry a 200-page notebook. I'm trying to share that notebook with you. If just give me a second. This kind of a notebook, which would have a paper on the either side as well. So on the left hand side, all observations of my team would be written, and on the right hand side, all the answers from the branch would be written on a daily basis. Whenever I or my partner visits, they would modify it, approve it, either for dropping it, for keeping it in working papers, or for taking it to the long form audit report or the main audit report. So when we try to write the long form audit report, we are all tired, we are all exhausted, and if you do not file the things properly, all the efforts are wasted. So make sure that this entire activity from day one is being linked with statutory audit report for matters pertaining to main audit report, any communication to the central auditor, some key audit matter you feel like you have to do it this time because of a change, that should be pointed out. Any modified opinion you want to give, then that should be linked properly. If you want to give an emphasis of matter paragraph, probably that would also add to your planning thing. All these are different, and one must make sure that the formats as suggested by the guidance note are being properly captured by the closing circular or the report formats prescribed by the respective bank. If they are not in line with the guidance note 2020 edition, then you all should follow the guidance note 2022 edition formats. The start audit report primarily talks of compliance with standards. The audit qualifications come here. Our memorandum of change come here. The paragraph where scope limitation for branch audit. You all are aware that this is not a complete set of financial statements. In branch, lots of provisions are not done. Like provision for retirement benefits is not done. Provision for NPA is not done. No doubt, as a branch auditor, we certify that provision, but in the books of accounts, it will be done at the head office. Write off, write back, many things. So all they are listed in our AC 700 prescribed report format. So you can go through it. Kindly read this as 2022. It's a typo error. Wherever you feel like you need to give more additional things, add annexures, supporting documents to report wherever necessary, so that the attention of the reader is being properly captured. In case of MOCs, make sure that increase and decrease is the only method in which we write MOC. Asset liabilities, income expenditure, changes in advance classifications, gross NPA, net NPA, provision for NPA, risk weighted asset in case of Basel III compliances, or any other matter where you need to pass a adjustment entry to make the accounts give true and fair view at the branch. The MOC should be passed. In case there is no change, then the nil MOC should be given, so that the consolidating central auditor would understand that in this particular branch, whatever materiality threshold has been prescribed, Nothing beyond that is found out by the auditor during the sample check basis. Make sure that your audit report is incomplete without MOC. So give an MOC nil or with numbers, and then it will be part and parcel of your main audit report. This is the general format which is prescribed in main statutory audit report. And for each of the 9 items listed here, like in respect of income, expenditure, asset, liabilities, gross NPAs, provision on NPAs, classification advances, risk-weighted assets, and other items, there would be a specific format prescribed by the bank, and that would differ from bank to bank. Also, the long form audit report in its revised version, I think somebody is going to take you through. One must make sure that the audit plan is linked with the ultimate requirements from long form audit report. Since it is an internal control evaluation questionnaire, each question in long form audit report gives us a fair idea about what is expected from us as an auditor. So that part can be configured as an audit program itself. It is comprehensive in scope and coverage. It covers all the areas of balance sheet, profit and loss account, other items as well. So while planning the audit or preparing the audit program, one must link every item in audit program to the reporting requirements, and vice versa. Every long form audit report point has to be brought into an audit program so that we make sure that not a single point prescribed in long form audit report is missed out. For that, there is a technical guide on revised long form audit report published in 2021. You can use. Also, we have to issue an audit report for internal financial controls from March 21. So this is the second year where all branch auditors at least will have to issue this report. So there is a technical guide for that. That was also issued in 2021, which is applicable for all of us to follow. Make sure that you read all questions in long form audit report. Plan and design audit program to cover every point so nothing is missed out. Prepare a separate checklist for each point so that your team is well aware of what area. Like if you remember, the first speaker, Mr. Ramesh, elaborately spoke about restructuring. MSME restructuring is a major area this year also. No doubt the 2020 circular and then the COVID-2 is still continued, but now is the time where some of the earlier restructurings, the period of 1 year is getting over, and now there would be lapses which would come to the light, and then to that extent we need to add a small checklist this year also for MSME restructuring. Also note down how much percentage of checking you are doing during the audit, how much samples you are selecting, and wherever in writing the report, my suggestion to you would be that you would elaborately write about what sampling you have done. For advances, undoubtedly, you will have to give a sample that you have selected 10 accounts, 20 accounts, and you have to also give a list. But for all other areas also, you should do that. Link the long form audit report to identify that proper documentation is maintained every day in the morning. Review of working papers of yesterday should be done by the senior most person in your team. And during the day, not a single paper should go out of the file. Whenever a new sample is collected, a paper is collected, sufficient or appropriate audit evidence is collected, that must be properly tagged, documented, and it should go in the working paper file immediately. Also, a request that all the hard work is done, then why to write answers in yes, no, and not applicable? Even after my repeated requests, I have seen many of my friends only writing yes, no, and not applicable. Again, to request to all participants that write elaborative answers. It should be descriptive. It should start with how much is your extent of checking for that particular area. And then based on that, you could say that based on my experience or audit tested, my item is including facts, figures, examples to the extent possible. Please avoid yes, no, not applicable. They are not complete answers, and then it is not sufficient to understand also for the readers. Wherever there are observations resulting in adjustment, it has to go through MOC. I've come across many instances where MOCs are part into long form audit report. No MOC is given, but the adjustment entry is elaborately described in long form audit report. Friends, make sure that the long form audit report certainly should contain the elaborative memorandum of change, but not without having a MOC passed. So give an MOC, attach it with the main audit report, and then write descriptive narration about that particular MOC in long form audit report. That is acceptable. But writing a descriptive narration, but not issuing a MOC and not writing it in long form order in main audit report certainly causes lot of difficulty for the consolidating auditor. Also, wherever possible, discuss the contents with the management, obtain their comments also. It's an independent report, so don't give cross references that refer to LFAR in main audit report or refer to main audit report or a qualification in long form audit report. Give independent reports. There may be repetition, but that repetition can go. Most important question, who reads my audit report? During my physical interaction prior to COVID, this was a common question. I used to get that. All said and done, who reads that? So the point is, it's a very, very important report. The first and foremost reader is the bank management. Second one is the statutory central auditor. Third one is the Reserve Bank of India. And it goes up to the audit committee, even if the smallest of the point you have raised, that needs to be answered, and it is being well read by many. Request is the statutory audit reports. You can please some of the people some of the times, but you can't please all of the people all the times. So make sure that you hit hard when there is an observation. Don't leave that observation to be missed by all the readers. It has to be brought into. So make effort that from planning stage, it is being properly documented. During the execution stage, action has been taken during that execution stage, and ultimately writing a paragraph in your main audit report as an annexure, or maybe in long form audit report as a narrative descriptive answer would be very, very important. Go through this revised LFAR contents 5, 9, 20, 20. The two paragraphs which are listed in 41 and 42, very important. They clearly talk about transaction testing, providing inputs on adequacy of implementation of various policy matters, transaction detailing, the thresholds fixed and tested during the LFAR, verification of data integrity, then data related control system and processes, talking about MIS. So expectation is that you configure all this into your audit program, you make your sufficient documentation in your working paper files that you have done this particular exercise, and then only you can complete this. Wherever you find that there are negative comments, they should contain, wherever possible, facts, figures, descriptive answers, and it is mentioned by RBI in the circular also now. Because primarily when I see the audit report, I get no, yes, no, not applicable. So to avoid that, this panel. So 41 and 42, no doubt somebody is going to cover it, but as a plan, you must make sure that points from LFAR are being of utmost important when it comes to audit planning as well as audit execution. Some additional points you would have to add this time, as I said in the beginning, like expertise required for digitization, CBS, software. A lot of new changes have come, and thanks to COVID-19 related audit processes, we are being well versed with it. Now we do work with data being given through the desktop model given by the banks. So remote audit, we should make sure that it is now to the advantage of ours. So there would be a mix of remote as well as physical audit. Internal financial control, configure it from day one. Long form audit report, configure it in audit program from day one. And more importantly, all certificates, configure in the report from day one. Fraud risk related controls like early warning signals or OTMS or EPFs, make sure that the data is being captured properly. Cyber security in banks, again, if your branch is involved into any of the attacks, additional audit area. Auto classification and NPA and provisioning from 1st July onwards, some banks have done it. You will get the data readily available. Control and reconciliation on internal accounts like inter-office accounts, inter-office accounts, clearing accounts, all those accounts where transactions are parked, sundry, suspense. Make sure that there are changes recently. Recent RBI circulars would warrant that all these points needs to be brought into the main fold of your audit program. Also, the comparative analysis of balance sheet and profit and loss account review, it's something should be brought into the main audit program. So during the planning stage itself, you should bring into how to compare which are the dates of GLPL balances which you are going to take. What are the key areas which are going to identify in it? Like my team always does at least 5 days comparison, for balance sheet and profit and loss review. And those 5 dates are all reporting dates. 31st March of previous year, 31st March which we are going to sign, and in between the 3 dates, 30th June, 30th September and 31st of December, which are the quarterly reporting dates for the listing agreements. What key areas of assets and liabilities you bring into suspense, sundries, other assets, other liabilities, and the large portion of asset being advances and the large portion of deposits being liabilities being deposits. So advances, suspense and other assets would be the 3 key areas you will be comparing. Deposits, sundries and other liabilities would be the key areas you will be comparing. You get a trend, then you can do +5, -5 also. Like for 31st March, you will compare with 25th March and 5th of April. For 31st December, you can compare with 25th of December and 5th of January, so on and so forth. That depends on what is your outcome of first 5 testing done, first 5 comparison done. Also, in case of income and expenditure, interest and non-interest income is a primary bifurcation, then commission, other income, maybe third-party income, anything you can drill down up to depending on team size and depending on the complexities involved at the branch. In case of expenditure, admin expenditure, establishment expenditure, salary, rent, interest, non-interest, both should be covered, and you should bring into the main audit program so that it is not missed. As I said in the beginning, certification has to be a part of your main audit program because it is an absolute assurance, whereas your audit is a reasonable assurance. So if you go through the guidance note 2020 or 2021, there has been an effort that can we write some covering page to bring this on a reasonable assurance level. Various returns like branch returns, balance sheet, profit and loss, and the annexures to suspense, sundries, all that is a reasonable assurance. Audit report is a reasonable assurance. Memorandum of change is part of a reasonable assurance based on your test check. Long form audit report, tax audit report, all is reasonable assurance. But certificates like Gilani Ghosh, it's a compliance, it's an absolute assurance. Yes, no, not applicable is the only answer, or implemented or not implemented. For various other certificates where point blank information is available and the certificate doesn't have any space for you to write any comment. You cannot say anything like that we have done it on a test check, sample base, or whatever. You have to verify a lot of returns. The closing balance to be reconciled with GL heads. Like I have come across many cases, many instances. Classic example I can share with you is like advances. In a branch, there are total advances, and we make sure that the total of advances is being verified by us thoroughly. No doubt about our fees is not the only issue, but the criteria is once the advances figure is numbered, then your percentage of NPA, gross NPA, net NPA, your sample selection of 10% or 10 crores and above, all that is dependent on it. Similarly, in case of certificates, whatever data is being captured, one has to make sure that it is configured in your audit program, that it is linked with testing, whether it's matching with GL and PL heads. Now, in case of advances, the first disclosure is that asset-wise classification, secured, unsecured, and then priority sector, non-priority sector classification. I've come across many instances during my audit experience that there is a gap. It does not match, and then there would be a reconciliation provided because there needs to be a MOC passed because there would be some wrong account classification done and then subsequently identified. So verifying all certificates with respect to linking with the GLPL data is very important. Also make sure that correctness of financial implication cause due to fraud is also identified. If there is a fraud, you will find it from certificate called certificate for claims not acknowledged as debt, or maybe a contingent liability not acknowledged as debt. Also, wherever possible, you will have to make sure that financial and non-financial information is being properly captured, and there is sufficient backup papers for every certificate is made available. As per the guidelines of ICAI, UDIN is one sufficient for audit report, including LFR and certificates. So capture it properly. You can refer to illustrative covering page. We'll share that if time permits. There are various certificates of last year. I could list it down here. There could be different set of certificates depending on bank to bank. Some of them are internal consumption certificates. Some of them are as per the RBI requirements. So naturally, to that extent, one has to make sure. Also, one should make sure that small checklist for type of certificate should be done. Like this on Basel, it's a disclosure requirement for SLR, CRR, provisions, gross net, NPA, asset liability module, related return, exposure to sensitive sectors, unhedged foreign currency exposure, UFCE. So it's meant for protection of depositors and shareholders by prescriptive rules measuring capital adequacy, calculation of risk weight assets, etc. Auditor's role is to go through the guidelines, circulars, also applicable specific circulars, then you can list it out, verify proper bucketing is being done, verify proper credit ratings are being obtained and appropriately the numbers are being clicked. Bucketing and non-fund based is whether manually done or being captured by the system. If it is a manual done, then the backup papers. If it is done by the system, then the system generated paper and your sample checking on that. So overall, a small checklist for a certificate would certainly help your team to make sure to plan the work effectively and to perform the work effectively. And it will certainly help you in writing the report. Also, in case of Ghosh and Jilani committee, you may, specifically use a method called structured walkthrough in SA 200, which is mentioned. You can, inquire with the management and then take a call. Various certificates, you can list it all. I would like to show you this. Make use of this guidance note on, reports or certificates for special purpose revised in 2016. Now this is a hardly 50-page document, 73 pages, issued in 2016, the revised edition. Downloadable easily, you can download. And look at this, index. I hope the index is visible to you on the screen. Can somebody vouch for it? Is it visible? Anybody from SIRC can confirm it? Is it visible? The list is visible?
Yes, sir. Yes, sir.
Yeah, okay. So the prescribed formats are based on this. You can draft it in the audit engagement plan that certificates needs to be done. This is our process of verifying this and issuing these reports. So make sure that the management knows that it is not easy to sign it. Just we need to verify, do the audit, and then a covering letter like this probably would help. This format you can download from the website, from the appendices. I'll just read it out. The certificate is issued in accordance with the terms of our engagement dated so and so. The accompanying statement contains various certificates issued by us during the statutory audit of so and so branch of so and so bank for the financial year 2021-22, listed in Annex A. Management responsibility, then auditor's responsibility, restriction of use paragraph, UDIN, sign, and then as per the closing circular, you can, you can make a list of all annexures, 20-30 annexures here, and then this can be a covering letter which will go along with your audit report, so that the reader knows that this entire certification which you have done is during the statutory audit. So it is certainly done based on a reasonable assurance basis, and it is done based on a sample check basis and not a 100% basis. This certainly reduces your responsibility to a greater extent. For Jilani Ghosh committee also, it's recommended, disclaimer kind of a negative assurance in our guidance note for quite a long time now. like we have examined the attached format of compliance. It's kind of negative assurance, we have not carried out investigation into the status of compliance by the management with the recommendations of Ghosh and Gilani committee. Our examination is limited to inquiries and obtaining confirmation. Based on above examination, subject to the matters highlighted below, we certify that to the best of our knowledge and belief, according to the information, nothing has come to our knowledge against this, and it is correct, something of that kind. And if at all we come across cases where there is a deficiency, we may write in serial number 1, 2, 3, and you can go on adding it. These are the tools which are available. Configure it on day one. So audit team is aware that for certificates, we need to plan it. And also while issuing a report, there has to be a cover page. Last but not the least, most important topic would be the documentation. Whole lot of things we have done, but one should remember the basics. What we have learned during our article time is that if you do not have documents, then you have not done the audit. No documents, no audit is a thumb rule. So your entire team should be aware that if they can't show the documents based on which audit is done. SA 230 primarily talks about the same. Nature and purpose of audit documentation, evidence of auditor's basis for conclusion about the achievement of the activities which are called audit, which is within the periphery of compliance with overall objectives which were set up at the beginning. Evidence that the audit was planned and performed in accordance with the applicable legal and regulatory requirements and in accordance with standards on auditing. So two primary focused objectives when it comes to audit documentation. In simple terms, you should prepare a documentation that provides sufficient and appropriate record of basis of auditor's report and evidence that audit was planned and performed in accordance with SAs. And this is what is very crucial when it comes to peer review. You may speak a lot of things, but your document should speak about it. And that's the reason, if you remember, I said categorically in the beginning, you should prepare the audit program, link it with how you are going to execute it, link it with what is the reporting requirement, and make sure that this all is available from day one in your records. The notebook concept, which I've said, is very effective in bank branch audit, and that is very, very good evidence that work was performed. And based on that, proper evidence is being gathered, papers are being obtained, printouts being taken, account statements being obtained, sanction letter copies being accepted. All that would become part of your working papers, so that somebody who looks at it as a peer reviewer would come to know that what is the basis on which you have concluded that there is a clean audit report, unqualified audit report, unmodified audit report, or if you have come across the evidence which has caused a modification in audit report, probably a modified audit report, a MOC, then a background of that and a paper working supporting that, that should be easily marked and available. So this one slide itself tells us that no documentation, no audit. The documentation should speak for how the audit was performed. There are two sets of files, permanent audit file and working paper file. Like in my initial discussion, the 5 points which we talked about is the appointment letter, then the acceptance letter, then the NOC from the previous auditor, then the audit engagement letter, and then the requirement checklist for what is required from the branch. Knowledge of business, compliance with ASA 200 series, 300 series, 400 series, and overall compliance of documentation, audit program, audit checklist, all would become part of your permanent audit file. Working paper file would be the compliance with all these, like audit program and its compliance, working papers linked with audit program, audit report linked with working papers, linked with audit program. So it's a nexus between audit program, then audit execution, and then the audit report. The form and content in the standard is clearly prescribed that it could be based on the nature, timing, and extent of audit procedures performed. So naturally, if you get an appointment, then you may pre-visit the branch. If it is a local branch, do some exercise, document it, and then all that will be brought into working papers. Results of audit procedures performed, audit evidence obtained. So you have written some queries, answers have been received. You have asked for some checklist based requirements. Those requirements have been received. all that would become part of your content of your working paper file. The significant matters arise during the audit, the conclusions reached thereon, and the significant professional judgment made in relation to those conclusions will be in the form of either in your audit memorandums issued, audit paragraph issued and obtained confirmations or replies from the management, or the notebook method which I have suggested, or a mix of all this. The documentation depends on factors such as size and complexity of the entity, nature of the audit procedures to be performed, identified risk of material misstatement, significance of the audit evidence obtained, nature and extent of exceptions identified, and the methodology and tools used during the audit. The examples could be audit programs, analysis, issues memorandum, summary of significant matters, letter of confirmation, representation letters, checklist, balance confirmations, correspondence regarding significant matters, and final concluding note, minutes of the meetings, anything. This could be in the nature of paper, electronic, or any other medium, and one has to make sure that they are being properly stored for a period not less than 7 years. Coming to the last point of our discussion today would be all this documentation ultimately leads to better presentation of your audit through the peer review process. I could list around 5 direct questions a normal peer review process would ask the practice unit. Is that inspection mainly consisting of examination of documentation and other records maintained by the practice unit. So overall, the peer review process itself is oriented towards documentation. The second point I could get through was practice unit should have written guidelines for maintaining working papers. So SQC1 prescribes that you should have standard policies for everything. One of the policies is maintenance of working papers. They should be easily retrievable and they should be clearly readable when somebody reads it. As I said, the document should speak that audit was conducted rather than the audit partner or the team member explaining that how the audit was conducted. Working paper should contain all audit evidence and all cross-referenced properly so that when you open a file, there is no need to go through, where is the other thing kept, where is the trial balance. So it should be properly linked, indexing it should be done properly, proper linking of audit program to executed papers to the report writing. Working papers should be properly filed in order to ensure that easily retrievable. I think considering the current situation, most of us who are doing audit of branches would be covered in phased manner as per the ICAI policy on peer review. And all of us would give enough importance to documentation. My personal experience is that all of us comply with almost 70 to 80% when it comes to scaling on all auditing standards. But with SA 230 is where we lack a lot. Times come that either we as peer reviewer undertake this peer review for others. We realize how important the documentation is. Similarly, we as a practice unit must make sure that for all our other audits which we maintain documentation, this is also an important factor in the economy which we are auditing, and we must make sure that we should all keep track of what documents we have kept so that tomorrow when somebody comes in for a peer review, we should be ready with all the papers. I think with the time allotted, I think I've covered all the topics which were to discuss in planning. If at all there are any questions, we'll be happy to take. Otherwise, over to the coordinators for this.
Yes, sir. Is my screen visible, sir?
Yes, the screen is visible now.
From the 11th question we need to take, sir.
So up to which 11 was dealt with, or this is I should take the 11th one?
11th question is.
Oh, can you share a list of 11th? I'll take. Okay.
Yes, sir.
11th question is, can you please share a list of relevant RBI circulars for statutory audit? I think I have already shared it, the site, and I have told you to download this version. Is it visible in front of my camera now?
Guidance note on audit.
This is the book. Yes, download it. All circulars are updated there. They are kept in 2 folders. You can download those folders and that's it. You will get all the circulars which are very important. No doubt, the circulars from 1st of March onwards, sorry, 1st of February onwards, you'll have to download yourself, because usually the process of guidance note covers only up to 31st January. But look at that, what is covered. 12th is intimation of our appointment to be done with the previous auditor and why NOC is to be taken from the previous auditor when the code of ethics does not mention about the NOC. Now, I think there is no question in this, because the querist has already mentioned that there is no requirement of such. I think you should go through the code of ethics and then decide accordingly. As per my view, as per what I have read through in code of ethics, it's the previous auditor who has to give a NOC to the new auditor, and that will be applicable to this audit as well. What are the important issues that we should ensure this year relating to previous year before starting the audit? As I said in the beginning, 2 or 3 key circulars I have shared. 15th November on NPA, then 31st October, I think, on disclosure, and then daily marking of NPAs, upgradation of softwares are the 3 or 4 issues which will be very useful for you all. Also, the compliance with LFAR guidelines and compliance with IFCO FR, internal financial controls or financial reporting, are the key things we should look into for this year's audit. 14th question is, branch manager is not supportive of the issues we found during the audit. What options are available for us? Report, that's the only option you have. Report in long form audit report. If no cooperation further, you can give a disclaimer in the main audit report, So there are options available. You can write in your main audit report, you write all your observations, attach it and say that no documents received and we are unable to comment. That's a fantastic thing. Automatically the audit manager would start cooperating with you, Say that this will be a draft audit report which will be issuing. Since you are not giving these documents, we would say that audit documents were not given for audit, hence we are unable to comment whether the branch gives true and fair view. Sample selected, or you can communicate with the higher management, you can communicate with the statutory central auditor if the matter still persists. Otherwise, the last option with you is you can issue the audit report, which is a disclaimer or a negative audit report. Sample selected as per your suggestion, we need to check in depth of all these accounts in transaction audit needs to be done. Like first of all, I am happy that you have noted a point from my discussion, but as an auditor, you should not do it because I have pointed that out. You should do it because the auditing standard wants it. You should do it because the long form audit report wants it, and you should do it because overall the expectation from the auditor is that you should do some kind of transaction testing. So vouching verification is something which we can't dispense with in the new area. So that is something which is very crucial. Sample, once you select a sample, then there is no percentage of checking available in that. So undoubtedly the sample which you select needs to be checked thoroughly, and that should be the periphery of your overall testing. If you feel that you're not satisfied with the observations out of your sample selected, you have 2 options: either to extrapolate that to the entire sample and write your audit report, or maybe deep dive, maybe do substantive testing by selecting additional sample. In the revised LFR, is there provision for extent of checking? First of all, the revision was done in March 21. So this year there is no revision. So this is an existing LFR only. Now coming to extent of checking, yes, in advances, they have clearly mentioned about the paragraphs which I have mentioned on slide number 40 and 41. That is the expectation on top of main LFR. So you should look into it. Go it. 5th September 2020 is the RBI circular. Please download it. Go through the first few paragraphs and you will realize what is expectation from you. Is there any specific mail from regional office to the branch stating that no management representation letter needs to be given and will be taken at a circle level? Again, it is, SA 500 series, 520, 530, 580 written representations. It is between you and the management. If you feel that they are not giving it, then you may appropriately write it somewhere, because you can't do audit for 365 days. And if representations are not provided, then certainly you will have to comment about those discrepancies which you have come across, or those assumptions which you are doing are without any supportive documents. By and large, many of the banks do provide representation letter, but yes, I do agree that there could be some representations which would be done only to the central auditors. Matter would be, escalated to the central auditors, then it would be easier for you to get the clarification on that. Is there any change in LFAR as compared to previous year? No, there was no. There is no change, and you could have dealt with 5 large accounts or 10 large accounts, but the selection criteria is the same, 10% or 10 crores, whichever is higher, you have to select. With respect to certifications, these are provided in formats made by the bank in digital forms, and we have no option to include in a report other than our DAC. Please advise. Absolutely right. Some of the banks do ask you to sign it digitally. Once you sign it digitally, along with that, you can issue manual report to the branch saying that the certificates which are digitally signed on so and so date are to be read in line with this report. So you can modify that line in your main covering letter for the certificates, and then you can write a report and give it to the branch and get an acknowledgement that is sufficient. Is there any audit tools for the bank audit? Please give name of some tools. Like you can go through the website of ICAI and search for audit tools. There are a lot of audit tools which are provided to chartered accountants through the committee for members in practice. Probably you may get the benefit of that. Otherwise, even a spreadsheet can be you can use it as a checklist, as an audit tool. You may get the data through remote access. That data can be converted into a spreadsheet required data, and then you may probably analyze it. So that is something which you can very well do. I think I've come up to set question 20. Any other question on that?
21 is around. Last question is there. So audit program will be changing from branch to branch, like agricultural.
Yeah, 21. Now it's visible on my screen. Audit program will be changing from branch to branch like agriculture. Absolutely right. Absolutely right. So the broader audit program is available. Each line of audit program you can further drill down based on complexities involved. Like if you get only agriculture advanced branch, there are no other advances. So naturally, the audit program for all other areas will not be useful for you in that particular branch. But you may have more additional checklists for the agriculture advances. So yes, absolutely fine. You should have a small checklist based on your own experience, based on your team's experience, and then you can modify that audit program, which would be branch specific, and it would be modified by you from time to time.
Yes, sir. Those were the questions compiled, sir.
Okay.
Yeah. 11 questions.
Any question comes and we'll take it. Otherwise, thanks to SIRC for giving me this opportunity. Thanks to all the participants who give patient hearing, and at the end, thanks for sharing these questions so that we all learn with this. Thank you very much. One of the best experience you should have during this audit. So have a mix of physical as well as the virtual audit, so that you will enjoy this audit. All the best to you all. Thank you very much.
Thank you so much for your time, sir, and thank you so much for the members who are stayed till the end of the session. Thank you so much.
Thank you.